Let's get started on Tax Certainty Day today. Welcome to all of you. I'm going to hand over the floor for welcome opening remarks to Manal Corwin, the Director of the Center for Tax Policy and Administration here, and then also to Alan McLean, the Chair of Business at OECD in a moment. I, of course, have the delightful pleasure of doing the housekeeping items before we get there, so stay tuned here. The chat function is disabled for security purposes. We have also stopped traffic outside so that everybody can focus on Tax Certainty Day. If you do have questions, please submit them via the Q&A functions. We'll try to get those questions in those sessions if we can. Otherwise, we will try to get to you after today's Tax Certainty event. We also welcome the press, so the whole world, that today is Tax Certainty Day, not just for Christmas. Every day is Tax Certainty Day. So welcome to the members of the press. Welcome to all of you that have come in such large numbers, over 800 registrations. So that's, I think, the housekeeping items. Without further ado, then, let me hand it over to Manal first to kick us off. Manal, the floor is yours.
Excellent. Thank you, Achim. And hello and warm regards to all of you. Thank you for joining us today to celebrate Tax Certainty Day, which is now a very important annual OECD tax event. I understand we have almost 800 participants registered for today's event. I know we're also recording, so folks can follow up and watch the recording. And we are delighted to know that so many of you remain engaged in the topic of tax certainty. You know, tax certainty is foundational for us, a foundational concept that unites stakeholders in its continued relevance and central importance to the broader tax policy work that we do. In particular, we know that tax certainty reduces compliance costs for taxpayers, and administration and collection costs for governments. It enables transparency and preserves fairness, and it is fundamental to promoting stability and durability of the international system. So accordingly, as we collaborate on coordinated policies to address new challenges, to reform existing rules, or to improve current instruments, tax certainty has remained a central design priority. Most recently, you can see this in the design and the key features of the two-pillar solution in the context of Pillar 1. A key component of the overall architecture of Amount A is the incorporation of binding dispute prevention and resolution mechanisms to secure certainty for in-scope MNEs with respect to the application and the calculation of Amount A and related provisions. This is a really big step forward towards gaining acceptance of these types of mechanisms in broader contexts. Amount B of Pillar 1 also promises greater certainty by streamlining the application of the arm's length principle for baseline marketing and distribution activities, which have accounted for a significant portion of transfer pricing disputes, and we know can create particular challenges in developing countries. In the context of Pillar 2, certainty with respect to the consistent application of the GLOBE rules is achieved in several ways. First, the drafting of detailed model rules and commentary that form the basis of domestic legislation. Second, the issuance of administrative guidance to supplement that commentary and clarify how specific issues are to be interpreted. Third, the determination of qualified status of the operative components of the rules, along with a peer review process and ongoing monitoring process to ensure consistent outcomes. And finally, through coordinated administration, again, through the use of a singular GLOBE information return. We are also increasingly seeing tax certainty mechanisms gain traction with respect to existing instruments in a number of different ways. For example, in the context of dispute prevention, more and more countries are signing up for ICAP, and both MNEs and tax administrations that have been through the program are extolling the benefits that they've realized from participation. In addition, we are seeing an increase in the use of cooperative compliance and joint audits. And we are also seeing an increased focus on bilateral and multilateral APAs, especially with respect to publication of the two manuals last year on these processes. In the context of, sorry, give me 1 second here. In the context of the, I lost my notes. Apologies. In the context of dispute resolution, we've also seen the MAP statistics show that we are making progress towards making MAP more efficient, effective, and timely, including through the use of arbitration where it's available. And here again, I think the work that's been done to incorporate those concepts into Pillar 1 will be key to continuing to make those mechanisms more familiar and reliable. And again, in this regard, I think competent authorities in the FTA MAP forum continue to exert significant efforts to achieve improvements pursuant to BEPS Action 14. So I think progress on tax certainty continues, and our commitment remains stronger than ever. There are several great discussions, I think, planned today with some dedicated panels, not only on the pillars, but on ICAP and the current tax certainty landscape. We also will cover the release of the 2022 MAP statistics and the 2023 consolidated information on MAP. And of course, we will hand out the annual MAP awards. So with that, I am quite certain it will be a productive day. So without further delay, let me hand it over to Alan for his opening remarks. Thank you.
Thank you very much, Manal. Thank you, Achim, Secretariat, and of course, the Forum of Tax Administration for organising this conference together. Business OECD places great importance on this annual event, bringing together taxpayers, tax administrations, for a concrete exchange of experiences, best practices, and approaches for enhanced cooperation with the objective of delivering greater tax certainty. Of course, it's also the time when we recognise great achievements, and it's always, for me, been at the highlight to be able to witness the handing out of the various awards that represent great innovation sometimes and great efforts that I think we all have to recognise. Because for us, enhancing trust between taxpayers and tax administrations is critically important. And that requires a close dialogue between tax administrations and businesses, of course, with the very valuable support of the OECD. We know that clear guidance across tax issues and a commitment to action for improved dispute prevention and resolution will reduce tax risk for both governments and businesses. Improvements in tax certainty give businesses the confidence to make the necessary investments for much needed growth. So this year's Tax Certainty Day is also extremely timely with the recent publication of the OECD G20 Inclusive Framework Pillar 1 Multilateral Convention and the large body of guidance which has been published on both Pillar 1 and Pillar 2 implementation over the past months. Last week, we had our own full meeting of the BIAC Tax Committee, including exchanges with the OECD Secretariat, where we had extensive discussions on the use of the ICAP program, the role of APAs and the MAP process, and the need for a dual approach, incorporating both dispute prevention and resolution. Just a couple of brief comments on ICAP. Generally, business at OECD has continued to stress the importance of tax certainty as a collaborative process, necessitating for tax authorities to develop the requisite capacity to respond to requests and efficiently manage inquiries, while taxpayers need, of course, to engage at an adequate level and provide feedback on that iterative processes. Business needs trusting relationships with tax authorities, and that includes transparency and certainty in the areas of data collection and privacy, as well as enhanced clarity on the risk assessment process itself. We're aware that increased participation by business on the ICAP program will become a critical element of the role of business in promoting tax certainty. And we look forward to collaborating with the FTA to survey our own members to identify further opportunities for increased enrollment and to reduce impediments. Tax certainty and the two-pillar approach. Tax certainty stability will also be imperative in the implementation of the two-pillar solution, and those comments have already been made by Manal. And that requires it to be both practicable and administrable for tax and business alike. This, of course, includes developing countries, an important part of the broad membership of the OECD G20 Inclusive Framework. Consensus and clear understanding of dispute prevention and resolution alternatives will be essential to the successful implementation of all approaches. The MLC text is also important for the OECD Inclusive Framework as it moves forwards towards implementation. Amount A of Pillar 1 is an important ingredient of the overall two-pillar solution, intended to bring consistency, certainty, of course, and stability to the international framework, and to prevent, of course, the emergence of multiple disconnected unilateral measures. With a view towards ensuring greater tax certainty, it's important that there is the opportunity for business to review the extensive MLC and related documents, and in particular to get responses from those businesses that are expected to be most impacted by Amount A on its entry into force. As the FTA continues to examine the life cycle of relevant policies globally for greater tax certainty, we will continue to engage business OECD members in order to solicit feedback on helpful programs and processes that can continue to be improved. I'd just like to conclude again by emphasizing that improving tax certainty across issues addressed by the OECD generally continues to be a top priority for business. Our aim at business at OECD is to work with the OECD to ensure that tax policy provides certainty via stable and transparent tax system that provides both efficient dispute prevention and resolution measures, along with consistent reporting requirements to promote cross-border trade and investment, innovation, and employment creation. So let me close by again thanking the FTA for this meeting and to emphasize how much we are looking forward to continued collaboration and engagement on these topics.
Thanks a lot, Alan. We're now moving to, I guess, our first substantive part after the opening now. It's item 2, the introduction, the release of the statistics. You can see Sandra popping up and Pierre-Louis, who hold all the data that you've been eagerly awaiting. What shall we see as we release these statistics? So we will hear from Sandra. We'll also hear from Pierre-Louis briefly about the work that we have done to consolidate some of the information that some of you found difficult to find. I guess it's a one-stop shop idea. Then we turn over to John Hughes, who's the chair of the FTA Forum, who sort of gets the insight here. And then also we're back to Alan to sort of get a reaction, like at a high level at least, sort of what do those results tell us? And then we shall continue throughout the day with other initiatives, and I'll come back at the end of this. So maybe with this, Sandra, what can you tell us from the engine room? What is it looking like? What do the MAP statistics tell us? Over to you.
Thank you, Achim. And so voila, there they are, the MAP statistics. So if we go immediately to the first slide, you can see, and we're always a little bit scared of showing you this slide because there's like 2 different things on this. There's the old cases and the new cases, the old cases where we have double counting, the new cases where we do not have double counting. But the majority of the cases now are new cases. So it means that it becomes more relevant to show you this graph as well, showing that almost as much cases have been closed as there have been started. So the inventory is getting up, but not too much. And so that's a good thing. Of course, if you take the end inventory, you see there's like a lot of cases in the inventory, and that is the purple part is without double counting. So there are a lot of cases in the inventory, and I think that's already very important for the rest of our day, because it shows that we will need more than just MAP to provide for tax certainty, and we will need more than just MAP to make sure that there's less cases in MAP. But so if we now take a closer look at the inventory evolution, and you do see here that since 2016, when we started with the MAP statistics as we have them now, with the common definition and the common start date, the common end date, the common outcomes, you do see that inventories have been getting up year after year after year. we are at the same situation now. If I can look with you, if we compare to last year, we have like 5.5% growth for other cases compared to last year. For transfer pricing cases, 3.9% growth, which is a little bit less than we have from 2016 to 9, but it still shows that cases are still getting up in the inventory. And that not respecting the fact that many cases are being resolved. So if we first look at the cases that come in the inventory, the cases opened, you will see that except for last year when we had a little bit of the number decreasing for once, but probably it will have been because of COVID. We see that cases initiated are going back up again. So we have again an increase of cases. And so you do see that we have about 2,500 cases that start in a year, which is quite a lot to say, because 2,500 disputes is not nothing. It's a lot of cases for taxpayers that have been subject to taxation not in accordance with the treaty, which most often is double taxation. And so a lot of things that need to be done to fix this. Even when you see that there are many transfer pricing cases, you also see that there's a lot of other cases that start every year, meaning that also individuals are often the victim of double taxation that is not in accordance with the tax treaty. So MAP is important, and I think it's really a part of everything we see in MAP. It's not only important for business, it's really important for business, but it's also important for the individuals. Now, you see here the cases opened. Now, if we look at the cases closed, you see this year a little bit less cases closed than last year, but still like almost 2,250 cases closed. So competent authorities really doing their very best to have enough resources to resolve a lot of cases. Of course, it's not when the case comes in that it gets closed. So numbers per year can change a little bit because it takes a while before cases get closed, and it will depend on the type of cases you have, of course. But you see that a lot of work is being done, but even with all that work being done, we still see that the cases are getting up. Now, to give you a little bit of an idea on where MAP is situated, if we look here at the top 25 of MAP jurisdictions, there's a few things you can see. Some of the big economies are not in the top 10. Some of the big jurisdictions that were in the top 5 a few years ago have left the top 5, and so they managed to do something to decrease their inventory. But if you see here that 44% of the MAP cases, at least one of the top 5 countries is involved. If we take the top 10, then we see that that more than 2/3 of the MAP cases, one of the top 10 countries is involved, and often more than one. So you really see a big concentration here with respect to MAP. It doesn't mean that the other countries are not important, because of course, if 2/3 of the cases, the top 10 is involved, it means that for 1/3 of the cases, other jurisdictions are involved. And to get like the complete picture and a complete success in MAP, you need the cooperation and the collaboration of all these jurisdictions, not only the top 25. But you do see that if the top 10 would invest a lot in dealing with cases more quickly, there would be a big change in the MAP picture. Now, we made you a separate graph to show a little bit who does cases with whom. And this is something we can now do because we have jurisdiction by jurisdiction information. And so you can see that if you look at the top 10 jurisdictions, about like we said, 2/3 of the cases are amongst themselves, and this graphs gives you a little bit of an idea who has cases with which jurisdiction. And so you see a lot of intra-Europe situation for cases, transfer pricing and other cases, but you also see that there is a big portion of cases that go beyond EU. So it's not only a EU thing, MAP. There's a lot of cases within the EU, but it clearly goes a lot wider than that. But it gives you a bit of an idea who's doing MAP with which countries, and you can see that these countries need to work very well together to get their cases resolved. Now, if we then look at the time it takes to close cases in 22, well, if we then take first the, excuse me, the transfer pricing cases, we see that there is a drop in the time it took to resolve cases, a significant drop this year. I think it's probably due to the fact that competent authorities are again able to talk with each other and have in-person meetings so that they can deal with the more complex cases in a more easy way. And so if we now look at the other cases, we see there's a slight increase, but it still remains below the 24-month average. And if we then look at all the cases, we see that we are at 25.3. The average that we try to reach, that we target, is 24 months. So we're not so far away from the 24 months. And what we need to not forget is that if we look at these numbers, they also include very old cases being closed. So that is why probably we are above the 24 months. If we would only look at cases that started after 2016, we are below 24 months. So this is good, although and this last thing to show you that even with more jurisdictions now filing MAP statistics, it doesn't impact the time a lot. And that is, of course, not so strange, given that most of the cases are between the countries that already filed in the past. But you do see that it's getting down for transfer pricing cases. But still, we will need to see how it evolves. And as from next year, when we talk about average time to close a case and the time of the cases in inventory, as from next year, we will show the age of the cases in the inventory so that you get a better idea about not only how long does it take to solve the cases that have been solved, but that you will also see what's still left in the inventory and how old are the cases in inventory. So that is something that we will be able to show you as from next year. Now, if we can quickly look at the outcomes, this is the general outcome slide with 59% cases fully eliminating taxation not in accordance with the treaty. But if we go immediately into the details, you will see that there is a split when we look at what it is for other cases and for transfer pricing cases. You see some differences. A little bit more transfer pricing cases closed with the outcome fully eliminating taxation not in accordance. On the other cases, a lot more unilateral relief, a bit more resolved by domestic remedies for the transfer pricing cases, just like withdrawn by taxpayers. Is that because it takes too long to resolve cases? Is it because of an amnesty rule where there's like another solution and the taxpayer decides to withdraw the MAP? Is it because of other things? It's not always clear what happens, but it is a significant amount of cases that are withdrawn by the taxpayer. So perhaps we will learn more about that in the following sessions. A last difference is where you see that objection not justified and access denied is a lot bigger in other cases, a lot smaller in transfer pricing cases. which is probably due to the fact that the taxpayers in transfer pricing cases are advised by people that are very aware of the rules, that file on time, that add the necessary information, and so cases are getting into the system. Although there may still be issues with access that we deal with later on. The last thing I need to say about this is that we see an increase of cases that are closed with no agreement, including agreement with disagree. It's still not a high percentage, but it has become higher than what we had in the past. I suppose it is also partly due to the fact that there were a lot of old cases still in inventory where probably competent authorities looked at whether there was still a possibility to get the cases closed. And if this was not the case, then they decided that it may not be useful to keep the case in the inventory any longer. Now, if you look at the outcomes over the years, you will see that most of them remain quite stable. There has been a decrease in unilateral relief, but on the other hand, we see an increase in the outcome fully eliminating double taxation. So that makes up for the other one. A bigger number of withdrawn by taxpayer, as we saw over the years, and for the rest, everything is rather stable, a little bit more no agreement, but not too much. Now, the last thing I always want to tell you is that we also have country-specific information, and if you go to the website, and it's my pleasure to tell you that if you would go now, you will already see the new statistics because they are online. You will get all information, not only, so you get the information aggregate, but you also get it per jurisdiction, so you can see how a jurisdiction is doing. You can compare how they're doing with the average or with a specific other jurisdiction. And not only that, but we have this specific tool that is the Compare Your Country, where you can really play and compare jurisdictions and get the outcome immediately. Now, with that, I stop here for the map statistics, and I hand it over for Pierre-Louis for the consolidated information on map.
Thank you very much, Sandra. The significant efforts that have been made by the inclusive framework member jurisdictions as part of BEPS Section 14 have led to there being more published information on MAP than ever before between the MAP guidance, MAP statistics, MAP profiles, and Action 14 peer review reports. While the information out there on MAP is extensive, it may be published in different places, and the FTA MAP Forum has been thinking of ways to make all of this information more accessible to taxpayers and communal authorities. So, in December 2022, the FTA MAP Forum agreed to publish for each inclusive framework member jurisdiction a short annual report featuring all the published information on MAP, an overview of its MAP statistics, as well as recent developments. This compilation is known as the Consolidated Information on Mutual Agreement Procedures, which will be shortened as CIM or CIM. The purpose of this compilation is to provide all stakeholders with a concise overview of published information on MAP in each inclusive framework member jurisdiction in a clear and simple manner. Now, on the next slide, I will quickly take you through the structure of the information presented in this document, taking the US as an example. On the first page, we can find an overview of recent developments regarding MAP and the Tax Treaty Network, as well as a link to the latest Action 14 peer review report where applicable. The second page provides detail of the jurisdiction's competent authority and also features links to its MAP profile, MAP guidance, and any additional links providing more information. And the last pages gives an overview of the jurisdiction's latest MAP statistics, along with information on the evolution of its MAP inventory over the years. This compilation helps us move closer to the goal of making information on MAP more and more accessible, and has been published this morning on the OECD website, so you can find it as of now. And with that, let me now give the floor back to Achim, and thank you.
Thank you, Pierre-Louis. You don't actually have to give it back to me because I will hand it immediately to John Hughes, who will tell us from the inside what all of this means to him. Welcome, John. Good to have you with us. The floor is yours.
Very good, Occam. Thank you very much. It is good to be with you, and thanks to all of you for joining. All right, so Occam, you have given me a challenging question, and perhaps it's one shared, so to speak, by the audience here. Right now that Action 14 has been around for a good number of years, and competent authorities have had several years to internalize the minimum standard and commit and recommit to the program of continuous improvement that it involves. Perhaps you're asking, why aren't we seeing the results? Why do we still see cases that are taking longer than 24 months to resolve? Why are we still seeing increases in the number of cases and inventory and things? Let me, if I may, let me unpack this a little bit, because I think some perspective and balance will be helpful for you all to understand as you think about the statistics. It is absolutely fair to say that the results for 2022 are mixed, I think, right? Numbers of new cases and total case inventories have increased, even as there are some positive aspects to the trends in the numbers of cases that are closed, both transfer pricing and other types of cases. And of course, that portends well for the future. Also, of course, there were some meaningful decreases in the time taken to resolve cases, as Sandra noted. For transfer pricing cases, the number of months on average that it took to resolve them did decrease meaningfully, and that's obviously encouraging to see. But once again, setting all that aside, we come back to the question of whether the results matter, and the results or improvements in the results matter to the members of the MAP Forum, those who are in the competent authority chair. What I can tell you from my perspective as chair of the MAP Forum, and I say this unequivocally, that our members do indeed understand that results matter, that improvements in the results, the types of results that are reached, the time that it takes to reach those results, they understand that those taxpayers who are using the competent authority or using the MAP process to resolve your disputes, they understand that these results matter. And indeed, they strove in 2022 to complete and improve upon the results, just as they did in 2021, and just as they did through the COVID years. So, but notwithstanding these very best efforts on their part, results will be difficult to come by, and I think this is due to some headwinds and some systemic, some that are reviewed by Action 14, such as the numbers of competent authority personnel that a country is able to devote to its MAP process, as well as perhaps the experience levels of their competent authority personnel. But also there are some factors that are outside of the competent authorities purview, such as, very importantly, the cooperation of taxpayers and their assistance in resolving cases in the MAP process. So what I think it's important for taxpayers and observers to take away is that this year's results, just as with prior year's results, need to be, as I say, put in perspective, and a certain balance needs to be brought to their understanding and interpretation. And indeed, it's important to wonder about what efforts the MAP Forum is taking to support its members as they all together try to deepen and strengthen and indeed broaden the principles of Action 14 and embed them in their handling of MAP cases. And so in this regard, let me just highlight a couple of different things that the MAP Forum is doing together with the with Sandra and her team. One important facet of this is indeed regards to Action 14 itself. And after completing its two-stage review program under Action 14 of all the different MAP Forum members, in 2022 and going into 2023, the MAP Forum has continued its review in consideration of clarifications, enhancements, and some improvements to Action 14 and to the assessment methodology. Those are important. They reflect the experience of MAP Forum members since Action 14 was first established. And it also just reflects simply the landscape of MAP in the past several years. The Tax Certainty Secretariat also has undertaken a very important and broad program of trainings in MAP. In these trainings, they are joined by experts from many different competent authorities, and very thank you to all those who have participated in those trainings as experts to give training on baseline MAP concepts, as well as some very practical applications and tutorials in the MAP process and APA process for that matter. These trainings are especially important, not just for those jurisdictions that may not have many MAP cases, but also for the many jurisdictions that do have more larger MAP competent authority functions, but do see a lot of turnover in their staffs, and that's something that's difficult for any competent authority to handle. And so these trainings can be especially useful for those countries as well. And separately, as so many of you know, the MAP Forum continued its partnership with Working Party 6 throughout 2023 on the important work on Amount B, which we do indeed look forward to pushing forward to completion and eventual implementation by January of 2024. So I could go on, but I hope that what I've been able to convey today gives you as I say, a sense of balance and perspective as you approach this year and other years' statistics. Again, don't look just at the ups and downs and the numbers themselves. Consider also the programming, the initiatives, the discussions, the collaborations, the coordination, and the other facets of Action 14 and the commitment to tax certainty that is integral to the MAP Forum and is very indeed deeply held by the MAP Forum members. So Akam, with that, I'll look to you, but perhaps I just pass off the baton to Alan.
Yeah, it goes over to Alan. Alan, please.
Thanks very much, John, and thanks to Sandra and Pierre-Louis also for taking us through those statistics. It's really important, of course, that we take the opportunity to reflect on the enormous progress. I mean, these are statistics that are very high level, but underlying that, as John has said, enormous amounts of efforts on many parts to make progress there. And also, of course, important as we go through the rest of the Tax Certainty Day for us to reflect on what we can learn and what we have learned over the past year since last Tax Certainty Day. Really great. I just also did sort of a shout out of thanks for the website data. You know, having those data available, having them so easily accessible, so user friendly, including the new CIM stuff, I think will be very valuable to many of us in the business community. But as John said, these are just statistics, they're high level numbers. It's important also to reflect on what they're telling us. You know, what are the underlying trends? What are the innovations that are helping to make those changes? And I think for those of us in the business community in particular, are there things that is there anything that the statistics are telling us about ways in which we could do things differently to improve those outcomes for all of us? And I think what are we doing differently across the entire spectrum of interventions, from prevention, of course, through to resolution, to make sure that we are indeed using all of those tools in our toolkit, including, of course, our new MIB, which is very important. Are there other ways in which that business can help the MAP forum itself? Are there different kinds of ways that we might engage, learn ourselves, and hopefully also inform what's going on there? So really important that we have these statistics, but recognize the points that have been made about them just being sort of highlights and high level numbers that we need to delve into, and this is a great opportunity for us to do that. So just a few comments on the numbers themselves. I mean, first of all, great to see, but perhaps not surprising to see that there's been an increase, but actually great to see that it's a relatively small increase, and that substantive results have been achieved over the last year in bringing down those cases. And I know particularly bringing down some of the really old cases, because of course those are often the thorniest and the most difficult. The fact that they're still outstanding means that they're difficult to resolve. So seeing that those have come down so substantially, I think is really great. And also seeing that overall the time taken on average to resolve MAP cases is reducing, that we're now at the 59% of full elimination of double taxation. I think all of these are great highlights that certainly the MAP forum members, competent authorities should be really proud that all of their efforts are really paying off. I think, as I've said before, there are some data there on concentration, and I'm not sure quite what to make of that. Whether it's concentration a good thing, and it shows that we have particular countries that are really open to MAP and embrace it and see it as a core tool in resolving disputes and eliminating double taxation, or whether should we interpret that as seeing some countries that rather prefer letting things come to this stage rather than eliminating them or preventing them at an earlier stage. So again, I think all of these things are just areas for us to focus on and hopefully learn from. I come back to that learning experience. I think it is a peer learning as between the tax administrations themselves. Of course, that's a very much part of the focus that we've heard of. But also I think with businesses, we can learn from each other, but we can also learn in some of these engagements with competent authorities and with the MAP forum. I would always say, as I think as we always have done, that in some sense, whilst MAP is a really important tool, it's sort of in some ways an admission of failure. We should hopefully be focused at the front end of the funnel rather than the back end. It's great that we have these great processes and the certainty that they bring, but I would want us all to redouble our efforts at that front end. What more can we do on prevention so that next time we come here, the numbers that we see coming into MAP are reduced for good reasons, because we prevented them rather than because they're not getting into the program itself. So thank you very much. Well done, everyone.
Thank you, Alan. I think we're about to wrap up this first session. I think, as you can see, as we've done for a number of years, what gets measured gets done. So having the statistics out there allows us to have a basis from which to operate. And of course, as I guess Alan has said, it shows us at the end of, if you call it a value chain, of sort of the back end process, and we need to work to the front end process. It's interesting, I guess, as Alan also said, to think about the numbers, to think about what they tell us. Germany continues the market leader in MAP, and of course they tell us that people also have confidence in Germans, so they use the procedure. And there's a point to be made, like the procedure is there to be used. As we've said, of course, it's not a first best, it's probably not a second best, but it's a third best, and it is a very important channel for resolution, and we see what it does. And of course, the existence of this also has an effect on the earlier stages as we get there. people are using the procedure more. We are putting more information out there. We're making sure that people have access, and that may also have a result that inventories are going up. And as you say, they're not going up by that much if we look at the percentages. We also see further integration of the world economy, and that's also why the country pairs are interesting. If there's an integration of cross-border activity, that brings the risk, I guess, a risk of also having disagreements, I think. And these are things. The concentration part is an interesting one as we try to understand and try to focus the resources of where we can have, I guess, the most impact. We recently had a meeting of the commissioners where we all brought them together from the OECD, the G20 economies and some others. And of course, jokingly, we said, we're going to lock the door because all of you in this room with a strike of the pen, you could solve all of those cases because they're just amongst the people in the room. And in fact, as Sandra and the statistics show, it's actually even a smaller group. And that's also interesting. But there are also countries that are heavily integrated in the world economy, and it's economic flows that determine these aspects as well as, again, together with others. But I think as you've said, John, and also you, Alan and Sandra, the program is also built up a little bit to say, ideally, and we've said this for a long time, prevention is better than cure. And so what are the sorts of things that get us in the early stages? And even the early stages, we're having such rules as Amount B and providing certainty in the rules themselves. And so these are all elements, I think, that we are going to look at in a moment. I think we're going to turn over, and I'm turning over to myself, so that makes the transition very easy, on item 3, where the first block, we wanted to go through again the tax certainty dimensions within the context of the two pillars, pillar 1 and pillar 2. And of course, within those, there's also aspects such as Amount B. Let's not forget that, which is very important. And see how the design perhaps of those newer initiatives, how that can help to avoid some of the issues that we have seen in the existing infrastructure. And clearly attempts have been made and you're aware of them, but we're going to go through them. Where we are in the tax certainty dimension, I think in pillar 1 and pillar 2, we're going to hear from the Secretariat to give us a quick update. I can already see Felicie and I can see Sriram, and I hand over the floor in a moment. Then I think Tim has joined us as well, and Oki, I think, is here. Then we have, I think, Maida here from Zambia, who will also speak to us. Marco Jubiale, the chair of Working Party 11, and not just the chair of Working Party 11, but also representing Italy here, where there's some very interesting aspects being developed. And then finally, last not least, we're going to hear from Jason and from Thomas about the business reaction, ultimately taxpayers and the experience, what they're expecting, how they see this different, how they would evaluate looking into the future. So without further ado, I think I hand it first over. I think it's you, Sriram, right? Yes.
Yes, thank you very much, Akim, and good morning, afternoon, and evening to all of you. So along with my colleague Felicie, we will be taking you through a quick recap of the tax certainty processes under Pillar 1 and Pillar 2. So when I say Pillar 1, we go through the Amount A MLC processes as well as Amount B. And for Pillar 2, it would be tax certainty for the globe rules. So to start with the Amount A tax certainty framework, we have many instruments in the tax certainty landscape that come with notable features that have been helpful for taxpayers. So the Amount A tax certainty framework itself is an innovative new framework that seeks to build on useful features in all of these instruments, such as early and multi-year certainty in APAs, the systems approach and cooperation in ICAP, combining multiple audits into one in joint audits, and of course, having a mandatory binding outcome in MAP arbitration. The end result which we have is a comprehensive and time-bound process that allows in-scope MNEs to apply for and get early tax certainty with respect to all aspects of Amount A, with several features built in based on comments received from stakeholders as well. So the Amount A tax certainty framework comprises 3 different types of certainty processes that in-scope MNEs can benefit from, along with a panel to resolve disagreements as well. So as you see on the slide, first we have scope certainty that allows MNEs to get certainty on whether they are out of scope for a period, avoiding the need for separate inquiries. Second, we have advanced certainty that allows MNEs to get certainty on their methodology and controls in areas where that's necessary for Amount A, like revenue sourcing and excluded revenues. Like APAs, advanced certainty is applicable for multiple periods and subject to critical assumptions as well. And third, we have comprehensive certainty, which is sort of the catch-all process, which covers all aspects of amount A, which are not covered by advanced certainty. So it is a single review that is known as a proxy for audit as such, conducted multilaterally, and the outcome would be binding on all parties to the MLC. And finally, the most novel part of this process is that unresolved disagreements from any of these reviews would go to a determination panel, which comprises both independent experts and government officials for a final binding outcome. So basically, the structured process takes on benefits from a lot of existing processes, and now we reach final binding multilateral early certainty through this process. So that's the message coming out of the Pillar 1 certainty process. Now, if we go to tax certainty for issues related to Amount A, as you know, Amount A coexists with the existing international tax rules. And so the MLC contains improved tax certainty processes for disputes under existing tax treaties that could affect Amount A, which we call related issues. These improved processes include an enhanced mutual agreement procedure MAP provision and a mandatory binding dispute resolution provision that an in-scope MNE can activate for issues that are unresolved in MAP for 2 years. Now, what are these related issues? The definition covers a broad range of disputes on existing tax treaty rules, most importantly, transfer pricing cases and business profit attribution cases. These cases also need to have an impact on Amount A based on whether 2 tests you see on screen are met. So either there should be an impact on Amount A relief, or the adjustment involved in the dispute should be material. There are several procedural features that I will not go into detail, but these ensure an enhanced and time-bound dispute resolution process, including features that are built in from public consultations. There's also a special feature for low and middle income countries with limited MAP experience to make binding resolution elective instead until they develop experience. So to sum up, this enhanced process for related issues ensures that first, of course, tax administrations are then encouraged to focus on dispute prevention to avoid resource outlay, like focusing on risk assessment, APAs, and other such processes. But if disputes arise despite these efforts, the framework allows them to be handled in the most efficient, effective, and timely manner. And with that, I will now turn to Felicie, who will give you a quick recap of Amount B and tax certainty under the GLOBE rules. Thank you.
Thank you, Shriram. And so let's continue the journey through the pillars and see that actually tax certainty is everywhere. Now turning to Amount B, which relates to the application of the arm's length principle to in-country baseline marketing and distribution activities. And which lies on simplification and streamlining of the methodology. This will benefit everyone, and in particular low capacity jurisdictions. We'll see that Amount B actually will contribute to tax certainty in several aspects. We can see from the design of Amount B itself that actually there are clear scoping criteria to identify the taxpayers that qualify for Amount B. Some of these criteria rely on objective and quantitative measures, which will facilitate and improve tax certainty as well. Amount B will, of course, facilitate a simpler pricing methodology by identifying applicable ranges for those activities where Amount B applies. And so this will be easier for the business who will need to apply these methodologies, but also for tax administrations themselves. And so the simplification benefits will be available to all inclusive framework members, but also in particular to low capacity jurisdictions, because those are the jurisdictions where there is a lack of comparables. So the absence of comparables make, of course, those transfer pricing analysis more difficult, and Amount B will help in that area. And beyond that, of course, it will also spare competent authority resources in mutual agreement procedures. We've seen how essential it is, because then there will be no need for extensive discussions on the comparables. And the outcome of Amount B will be incorporated soon in the OECD transfer pricing guidelines, so we'll even see more tax certainty on that front soon. Turning to Pillar 2 now, we can see here everything that has been already initiated to prevent disputes in relation to the GloBE rules. So you have noted that the inclusive framework has already made significant efforts to ensure tax certainty directly in the design of the model GloBE rules that have mechanical rules that apply and that are supplemented with a detailed commentary that already provides for clarifications in detailed situations, and that will be supplemented with detailed administrative guidance that will be developed on an ongoing basis to further clarify those instances where more clarity is needed. And especially, I can tell that right now we are also working on these pieces of administrative guidance to provide more tax certainty to taxpayers, in particular in the areas where there will be more need for that in the near future, such as the application of the CBC safe harbor, for instance. That was just a parenthetical. Now, going back to what we've done in the design of the GloBE rules, we've articulated, the inclusive framework has articulated a clear rule order that relies on a qualified rule status that will be monitored at the inclusive framework level, also through a peer review mechanism that is currently being designed by the inclusive framework to ensure that there is a consistent understanding and application of the rule order. Beyond that, the inclusive framework has released this summer in July a GloBE information return that is to be used as a standardized tool to collect information by the tax administrations when the taxpayer is in scope of the GloBE rules, and that can rely on a central filing mechanism, and that will then form the basis for dialogue among the tax administrations where necessary. Beyond that, and beyond those measures that are already baked in the rules themselves, there could be a common framework that could be developed based on the common application of the same rules in several jurisdictions. So there is scope for developing a coordinated risk assessment process or coordinated further information requests, for instance. Business has also advocated the possible development of multilateral advanced certainty arrangements that could altogether enhance tax certainty at an early stage of application of the GloBE rules. Now, if I turn to the next slide, thank you, Sharon. We know that in the design of the GloBE rules, actually there is a mechanism that deactivates the application of the same rules in the other jurisdictions, such that the application of the same rules in several jurisdictions is actually limited to exceptional circumstances. For instance, you may have heard of the UTPR allocation mechanism or the partially owned parent entity situation. And then for those cases where the rules may apply in several jurisdictions, some options are being explored for promoting as well tax certainty, noting that there are specific challenges because the GloBE rules are incorporated in the domestic legislation of the jurisdiction. So there is a need for special thoughts to be given to the design of dispute resolution mechanisms. And here you can see the options that are explored, and that first rely on the possible application of existing treaties that already provide for the possibility for competent authorities together to discuss issues that are not covered by the treaties, or the possibility to develop a multilateral convention, or to rely on reciprocal domestic provisions. I think we will hear more from the other speakers on these aspects, so I will just limit myself to that, and look forward to hearing from the other panelists. With that, I give it back to you.
Thank you, Felicie. And I guess, as you said, we are looking at a multilateral convention and so domestic provisions. We hear this. Keep the questions coming. We have been answering the questions while others have been speaking. So we're trying to close map cases as we move along, so statistics looks better when we finish tax certainty than we started. There isn't yet an impact assessment on the map activities and the consequences, because as Felicie has explained and others also, we're still trying to minimize what goes into the map line using different aspects. But now let me hand it over to Tim, who's joined us from the UK.
Thank you very much, Akim, and good morning, afternoon, evening, everyone. So I'm Tim Power. I lead the corporate tax division in the UK Finance Ministry and have been asked to give a country perspective on the different Pillar 1 tax certainty components. I mean, firstly, I hope Sharon and Mark don't take offence, but I'd say that it's not the most glamorous Pillar 1 building block that we've discussed in the TFTE, but equally, I think it's probably one of the most important and foundational, and I think that's demonstrated by the level of stakeholder interest in the subject, but also the amount of MLC tax that is dedicated to it. And maybe if I start with some high-level reflections on both components before handing over to Oki, who is far more expert on the subject. I think on amount A certainty, I mean, it was recognised, I think, early on that we couldn't credibly have a situation in which a covered group is exposed to separate inquiries and audits in each jurisdiction to which the Pillar 1 MLC applies. I mean, that would be hugely burdensome and duplicative. It would invariably lead to adjustments that create double taxation, and there would be no established mechanism for resolving that double tax. I mean, just consider that the UK is a relieving jurisdiction for a group, and the UK considered the measure of profit used to calculate the amount A allocation is overstated, meaning that we reduce the double tax relief that we're obligated to provide. I mean, that's double tax that is then created between the UK and potentially 100 plus bilateral relationships with market countries. And we can't reasonably solve that through bilateral routes, especially when you factor in that there could be concurrent disputes that are interdependent and that not all of those bilateral relationships might be covered by double tax agreements. And you could say, well, are you not just describing a problem that is inherent to Pillar 2? But I think it's not a fair comparison, given that, as Felicity's slide showed, Pillar 2 coordination can rely to quite a significant extent on rule order and assessing rule qualification status. All of that recognition led to the creation of what is quite a novel new multilateral binding certainty process or coordinated compliance system that is reflected in the MLC. You know, there are various different components to that. You know, in some situations, it's about giving a group certainty as to whether it's covered. In some situations, it's about giving a group certainty as to its revenue sourcing methods. In other situations, it's giving a group certainty as to its Pillar 1 computation for a period. But I think in all of those cases, the basic idea is the same. The basic idea is that all parties are involved in assessing how the MLC applies to a group and then coming to an agreement on which parties are ultimately then bound. That is obviously extremely novel. We're trying to bind potentially 100 plus countries to a complicated and interdependent set of issues. And the question is how you ensure all countries have a meaningful participation in that process while ensuring the process is also proportionate and efficient. And I think we sought to achieve that balance in the MLC through a process which starts with a review that places a lot of emphasis on the lead tax administration and a small panel potentially of tax administrations, then seats the comment, input and challenge of other parties, and only then moves to determination panels if we can't find an agreement at that point. That process might not sound straightforward, but I think it's aided by the Pillar 1 calculation being based on largely quantitative tests. It's aided by strict time limits. It's aided by there being materiality thresholds for parties to raise objections through that process. And I think it's finally aided by the fact the process doesn't look to insert itself into bilateral transfer pricing and PE disputes that might be relevant to the Pillar 1 calculation. It instead accepts that those are bilateral matters, and the effect of or outcome of those processes then incorporated into the Pillar 1 model on a prospective basis. I mean, just final three observations on this component. I mean, I think firstly, we have sought to respond to the comments that were raised in the consultation. For example, through including a greater role for multinational groups in the review process. I think second point, we have sought to recognise that there might be particular challenges in this process for low capacity countries, and that's through how the panels are constituted, but also through a quite concerted focus on capacity building moving forward. And then I think third point, there's obviously a lot of quite difficult policy decisions that have needed to be taken as part of this component. So how the process is funded, how the panels are constituted, how panels come to decisions on issues that have multiple alternative outcomes. And I think people can look at the MLC and come up with different views as to whether it reaches the right answer on those questions. But it is something on which there's been quite extensive discussion, that's had to accommodate some quite different viewpoints. I mean, moving on to tax certainty for issues related to Amount A, I mean, this to me is less novel, but no less important. I mean, it's about allowing covered groups to access MAP and dispute resolution mechanisms for broadly Article 5, 7 and 9 disputes that concern MLC parties. And to me, this recognises two things. I mean, firstly, it recognises that Pillar 1 is a complex new framework and that it's reasonable at the same time to provide affected groups with greater access to mechanisms for resolving significant and common disputes and facilitating a greater focus on dispute prevention. I also think it recognises that profit allocation disputes will directly affect the Pillar 1 calculation. And it's therefore, appropriate to have a mechanism for reaching resolution on those disputes. Again, there are a lot of decisions that had to be taken here. There were decisions on whether it's all Article 5, 7 and 9 disputes. Are all of those disputes related to Amount A, or is it just a subset? and Shirima set out that we've ended up with some conditions which try to create that causal relationship without undermining the objectives here. Secondly, how does this interact with existing mechanisms in DTAs? We've taken the decision to respect existing mechanisms while allowing the parties to those mechanisms to adopt this approach if they choose. And then finally, is this binding on all countries, or is this only binding on certain countries? And we've reached an agreement that this mechanism should be elective for a subset of low-income countries that have no or low MAP experience, and allowing those countries to then build confidence and capacity before these approaches become binding. And I think overall, the approach to those questions, again, can be challenged, but I think it's a sensible and proportionate response that has allowed us to get comprehensive agreement on this, while I think maintaining the value and objective for businesses. But with that, let me hand over to Oki, who might delve into this in a bit more detail.
Thank you, Tim, and hello, everyone. Thank you for having me in this session. What I wanted to talk about in this session was to point out some of the several of the important point of tax certainty for amount A and tax certainty for related issues. First of all, I want to start by saying that tax certainty for amount A is mandatory. I mean that if a jurisdiction wishes to have a share of amount A, that jurisdiction needs to take part in this mechanism and provide certainty to in-scope groups. This is, first of all, I think that important thing to remember. And tax certainty for amount A has to be efficient because comprehensive certainty needs to be requested and provided every year. One feature in this context, I think, is providing advance certainty. Framework or classifications with regard to revenue sourcing and exclusions will be set for several years, 3 to 5 years, by providing advance certainty, so that comprehensive certainty can be somewhat less comprehensive and streamlined during such period. I think this is very important feature on the overall tax certainty mechanism for amount A. And therefore, advance certainty is very important, but establishing the framework or classifications inevitably involve systems development, which requires costs and time to implement. And certainty reviews cannot begin until the multilateral convention is in effect. So to address these issues, transition period is provided. This is another important feature which is provided in the MLC. During the transition period, in-scope group will be able to base their revenue sourcing on allocation keys rather than reliable indicators. And even when reliable indicators are required, there will be another period during which no adjustment will be required as long as the group has taken reasonable measures. So these measures provide in-scope groups to prepare for the implementation for new amount A rules. And providing amount A certainty is multilateral in large scale, so we need to prepare for disagreements. And I want to point out largely two important features in this regard. First, each review process is subject to strict time limits. Extension can be done only in defined circumstances. In other words, these time limits are not targets or guidelines. At the end of the time limits, a review moves on to the next stage. It is assured that an outcome will be given in a time frame provided in the MLC. And second, where there are disagreements, they are taken to the determination panel, which comprises government officials and independent experts, and they will decide a binding outcome. These are, I think, very important features, points that should be remembered in the tax certainty for Amount A. And moving to the tax certainty for related issues to Amount A, it is largely based on the existing arbitration mechanism provided for transfer pricing disputes, but it has several procedural features that addresses issues noted by taxpayers in the current procedures. One of them is, I think, that request for map will be submitted to both CAs, meaning it is ensured that one of the CAs will always bring the case to the bilateral stage. And importantly, disputes on whether the issue is related issues or not is also covered by this mechanism. And second, MAP agreement will be implemented notwithstanding domestic time limits, which I believe is not always possible under existing tax treaties. Third, there are clear rules to determine the 2-year period. I mean, there is a limited possibility to delay start date for the 2-year period by making unreasonable information requests. And fourth, possibility for the taxpayer's original position in the MAP request to be considered by the panel before the decision is taken. This is clearly provided in the annex. And fifth, the same as tax certainty for Amount A, tax certainty for issues related to Amount A is under strict deadlines and default rules at every stage. And so that the dispute resolution process concludes in around 1 year from start to end. And so these are what I wanted to mention on this session. But before I close, I want to comment one thing that Amount A system is a very unique in the sense that it has a single tax rules which is implemented and administered collectively by multilateral tax administrations. So it is completely a new international taxation system, I believe. And I think that tax certainty mechanism supporting such a novel taxation system has an indication for everyone of future tax administration with respect to international taxation in the next era. Thank you very much. I hand it over to Hakim.
Thank you, Oki, and thank you, Tim. We're running a little late, but it shows that there's a lot to talk about in the topic. I'm very pleased also to now hand over the floor to Maida, who's stepping in here. Thanks a lot, Maida, who's Assistant Inspector Policy and Legislation with the Zambia Revenue Authority. The floor is yours, and thanks for joining, Maida.
Thank you very much. Hello, everyone. Let me begin by saying that the importance of tax certainty cannot be overemphasized, especially in the current economic climate. And it's even why Zambia, we applaud the OECD role in enhancing tax certainty, and we value events like Tax Certainty Day because it provides us an opportunity for tax policymakers, tax administration, business representatives, and other stakeholders to kind of take stock of the tax certainty agenda and move towards further improvements in the dispute prevention and the dispute resolution. And speaking of dispute prevention and specifically focusing on Amount B of the two-pillar solution that was agreed in October 2021, Amount B provides for a simplified and streamlined approach to the application of the arm's length principle to e-country baseline and marketing distribution activities The situation, capacity restriction like Zambia is that it's been a challenge to, in terms of scoping out pricing baseline and distribution activities. And it's been very challenging to find appropriate local market comparables. And you have situations where in some countries, the courts have actually ruled that some certain low capacity restriction cannot use Western Europe comparables. So it has made the situation very difficult, and I think discussed across most of the countries in Africa. And if you look at the statistics from ICAP, ICAP records that African Tax Administration report that between 30 to 70% of all their transfer pricing disputes relate to these baseline disputers. This is why ICAP and the low capacity restrictions refer to Amount B as a game changer for the African transfer pricing landscape. And indeed, Amount B is a game changer in the sense that these disputes relating to baseline disputers are a significant drain to on financial and administration resources for under-resourced tax administrations, because you see that instead of these low capacity restrictions that have low, say, human resource, instead of spending that resource in auditing that will actually bring revenue, they end up spending that resource to resolve those disputes, making court submissions and whatnot. So this is why we see as low capacity restriction that Amount B is an integral part of the consensus on the two-pillar solution for developing countries, because it really has the potential to increase tax certainty and secure the critical tax revenue for low capacity jurisdiction. And I think to this effect, the inclusive framework has worked closely with the low capacity decision, and I think they have never worked more closely than they have now to ensure that the Amount B solution effectively addresses our unique needs. And this has meaningfully impacted all the elements of Amount B, starting from the scope to pricing and actually to implementation. And I know one might ask in what ways the Amount B solution will effectively address our unique needs as low capacity restrictions. Well, let me maybe try to give examples that are very close to Zambia. And this is because we have been heavily involved in the negotiations, and we were one of those countries that have a challenge of finding local market comparables. So one of them is that ICAP and low capacity jurisdictions successfully advocated for the inclusion of sales agents and commercials into the Amount B scope. So this is because from our experience, especially, we consider that many sales agents and commissioners exhibit similar profiles of functions performed, assets owned, and risk assumed to wholesale distributors. So if they were out of scope, it would have been a challenge, because it meant that the number of disputes should not have been eliminated, because we face the same challenges with our sales agents and commissioners. The second one is the Amount B scope, which leans toward a more quantitative criteria, which is very, very important for low capacity restriction that favor a simpler and more administrative approach, because when we talk of these capacity challenges, we're talking of in terms of numbers. So the simpler the approach is, the administrative it is, the less likely that low capacity jurisdiction will need more resources to actually implement Amount B. So this is very key as regards to tax certainty. The third point that I may also mention is that low capacity jurisdiction also managed to negotiate for the inclusion of data availability mechanism, which will adjust the results of the pricing metrics to compensate for the country risk adjustment that may be different. So this was a very key issue for us, since independent distributors operating in our regions tend to report higher profits due to operating in a higher risk market, because most of the low capacity restrictions are high risk markets. Therefore, the inclusion of country risk adjustments will ensure that in-scope marketing and distribution activities carried out in all low capacity jurisdictions, especially in Africa, earn an appropriate profit margin based on the risks that they actually face. Another win for us is the inclusive framework's commitment to incorporate Amount B into the OECD transfer pricing guideline, and this is very important. And the commitment is that by January 2024, we will see this Amount B in the TPG. This is very key for implementation in especially Africa, since many African countries, including those that are not actually inclusive framework member countries, use the transfer pricing guidelines. So it is vital that Amount B will be incorporated in the guidelines in January 2024, and we think this will effectuate, will give more authority for many African countries to use to use Amount B, not only for the tax administration but also for the taxpayers that are in our jurisdictions. In concluding, I would say that it's not arguable that jurisdictions have diverse backgrounds and may endeavor to encounter different challenges in applying their arm's length principle. But a situation where jurisdictions face capacity constraints and or challenges associated with the identification of reliable source of information, like is our experience in Zambia, they may choose to actually apply the simplified and streamlined approach to address the disputes that are incidental because of lack of local market comparables and the low capacity. So we are of the view that this will bring a lot of tax certainty, and we thank the way the negotiations have been going, that there has been really due consideration to the unique challenges of Africa. Thank you very much. I submit back to Akim.
Thanks a lot, Maida. Thanks a lot for giving us your insights on where we are and and explaining what's at stake and how this works in the context of your country. So we've gone from the UK, we've gone to Japan, we've now gone to Zambia. We're going to go to Italy. I think Marco Uviale, the chair of Working Party 11, I guess, is going to give us his perspective also, not just as the chair, but also as a representative of Italy. Marco.
Yes, thank you very much, Hakim, and hi, everyone. I think that as the previous speaker have indicated, the Amount A and Amount B are important. Amount A as important feature of tax certainty in the design. Amount B is a major simplification and clearly will bring certainty, in particular on transfer pricing issues. On Pillar 2, here there is also the issue of tax certainty, which is quite relevant. And if I see this from a Working Party 11 perspective, the ongoing discussion and also the past discussion was focused on ensuring certainty also through properly designed rules to be implemented, to be applied in a consistent and coordinated manner among all the jurisdictions. And in this sense, the ongoing work on administrative guidance is particularly important because it's a prerequisite to ensure a consistent implementation among jurisdictions of the global rules. And also the ongoing work on the peer review process, it's an important component of this certainty of the mechanism, because clearly having the status of qualified rules will clearly allow MNEs, but also tax administration to rely on this qualification, and clearly this can be the basis for the implementation in a consistent, coherent manner. If I see this from an Italian perspective, we know that we are implementing the global rules through the European directive that now has been transposed in the domestic legislation. Clearly, this element of rules consistently applied across the world, because MNEs are operating in different jurisdictions, is relevant also in our domestic legislation, because the reference to the administrative guidance as source of illustration and interpretation is in the directive and the domestic legislation. We will have secondary legislation clearly inspired by the administrative guidance, and the absence of secondary legislation. We will have, in any case, the reference to the administrative guidance in terms of application. We also have clear in mind the fact that the dispute can, in any case, arise coming from the different interpretation or application of the rules by different tax administration, different jurisdiction. And that's also the reason why we decided to introduce in our legislation implementing Pillar 2 a provision that also was a domestic provision, which are kind of, say, unilateral attempt to promote or to try to ensure certainty, allowing essentially our tax administration, our revenue agency, to undertake discussions with a counterparty in other jurisdictions where the MNE is located, in order to solve potential issues of interpretation and application of the global rules for a particular MNE. Essentially, this provision allow the MNE to start a mutual agreement procedure, both in case of existence of a tax treaty with Italy or in case of the absence of tax treaty. Clearly, this would allow the tax administration to speak and try to solve the potential issue where different interpretations are made on a specific case, and clearly solve and interpret it in on a common agreement. This would be both in case of a treaty and also in the absence of a treaty. Our administration has the power to enter in this kind of conversation. Clearly, the requirement is that also the other jurisdiction, the other tax administration, has the same power to undertake this discussion. Clearly, this is something that can work if there is reciprocity in the application of this provision, and in our perspective, would be important also to continue to discuss and develop a multilateral instrument that can ease the resolution of potential disputes coming from the implementation of Pillar 2. And maybe a final word on the also on the joint compliance, which is also an important element in the international discussion. Also, from our perspective, we have a compliance program in Italy that has been expanded in order also to include MNEs which are in the scope of Pillar 2. So the relevant threshold has been decreased in order to allow the MNEs in the scope of Pillar 2 to potentially enter in this compliance program that clearly would help the dialogue between administration and the MNEs. Thank you.
Thank you very much, Marco. And those are interesting developments in Italy. I think we will discuss them. I don't know. We're turning over to our speakers from the business sector. We're running a little late, but don't worry. You have your time. This is important. We'll eat a little into the break, so be it. So I think we're first turning to Jason Wiegand, who's Senior Director, North America Tax at Procter & Gamble. And then after him, I think we hand over to Thomas Catrevallé, who's the Deputy Group Head of Tax at Air Liquide. And I think what we had in mind, and then I shall be silent for the next 20 minutes, if I can manage to do so, is that maybe you, Jason, you kind of look at tax certainty from a business standpoint, and of course both of you do, and then maybe you focus a little first on A, and you see how the architecture that we've described, how that hopefully positively departs from the environment that we currently face. And then maybe if you could also spend a word, I think, on amount B, and maybe also outline what the expectations from the businesses, and I know you're one voice in business, and so you can't be speaking for everyone, but what are sort of the expectations still for B? And then Thomas, as we turn to you, I think, there's questions around, how can we design the compliance best in the Pillar 2 space, maybe also a reaction to what you've heard from Italy, and whether it's an instrument, a multilateral convention, as Marco has indicated, that's still in discussion here, or domestic rules. What would you like to see? What would your expectations with respect to a globe dispute resolution mechanism? So those would be broadly the questions, but in your hands. I mean, this is over to you. So I think we'll start with you, Jason, and then turn over to Thomas. And do take your time. A little less break is not that much of a big deal. And we can't hear you, at least I can't hear you. No. Can somebody hear Jason? No. So maybe what we'll try to do, maybe we'll flip the order, Thomas. Maybe we'll try you first, and then we bring Jason if we can hear you, Thomas.
Okay, no problem. Can you hear me?
Yes, loud and clear.
Good. Thank you, Achim. Good morning, good afternoon, everyone, and thank you very much to the OECD for allowing this very important discussion on tax certainty, especially in the context of the two pillars. So I will talk about the global side of the tax certainty. I have to say I'm part of the business advisory group with the OECD on Pillar 2, so we have engaged a lot with Achim, with Felicie, with John, and the rest of the team on those topics, and we hope to continue to do so in a very constructive manner, as has been the case so far. So I will start by saying that MNE are indeed quite concerned about tax certainty with respect to Pillar 2. And when I say tax certainty, I mostly mean a consistent application of the global rules across all the countries which implement Pillar 2 based on the same principles, the same understanding of the rules, and following the right ordering of the rules, because as you know, in some instances, several countries may have a right of taxation with respect to Pillar 2. So in our view, the risk of dispute could arise not only between two countries, but also between the taxpayer and a top-up tax collecting jurisdiction because of a divergence of interpretation of the rules between that taxpayer and these authorities. So with this respect, the continued guidance that's been issued by the OECD and the inclusive framework is extremely helpful, of course, for the business community. And MNE really hope that this process will continue, as in fact, many important points of interpretation remain to be clarified. And in fact, new points could emerge in the future based on experience and feedback from both the business community and the authorities as MNE implement the rules and as authorities audit them. In terms of coordinated compliance, I think this was touched on by Marco and the principle of the central filing of the global information return with exchange of information procedures which are similar to the country-by-country report is of course very helpful, as is the concept of dissemination, which limits the amount of data that is shared among the jurisdictions, which was a very important point for MNE in terms of data privacy. The temporary reporting simplification on a jurisdiction basis for high tax country is also very beneficial in terms of targeted compliance. And MNE strongly believe, in fact, that this could be made more permanent, and we really encourage the inclusive framework to resume the discussion on this point as soon as possible, of course, way before the end of the 5-year period. Now, this being said, I think the real future of Pillar 2 are QDMTT. Most of the countries implementing Pillar 2 are saying we will enact QDMTT, so MNE will face QDMTT in many countries where they are located. What this means is that we hope for consistency as well within this QDMTT framework, and that's also an important part of the tax certainty for MNE. This means that QDMTT should embed the transitional safe harbors. They should allow the use of UPE group accounts when the MNE has relied on these accounts to perform the central global calculation. And of course, the QDMTT compliance should stay as close as possible to the global information return formats in order to avoid unnecessary duplication of compliance across the countries. And so the consistency of these QDMTT implementations with as few deviations as possible from the global rules is a critical point in our view in terms of tax certainty. And when the QDMTT safe harbor applies, MNE would hope that audits will be limited to be performed only by the country where this QDMTT safe harbor applies, and not face many other requests from other countries, which in theory should no longer have any collecting rights as long as the QDMTT safe harbor properly applies. I think you also mentioned a peer review process in order to qualify the way each country has implemented Pillar 2. This is obviously also very critical, but it will take some time given the amount of countries that are engaged in the implementation. So companies in the meantime will need to rely on existing legislation in all the many implementing countries while this process is going on. And for us, it's obvious that the business should not be penalized retrospectively if some of those rules would turn out later to be considered as non-qualified after the peer review process. So this is also a very important part of the tax certainty. You mentioned, Achim, maybe enhanced cooperation. We can clearly see a lot of benefits of a coordinated approach among all the countries where a group is established to provide security to this group. As an example, we think that a risk assessment approach could be taken, which could allow to reduce the level of calculation details required for certain countries, which could be assessed as low risk of generating a top-up tax situation based on specific fact patterns, which could be presented by an MNE to the various countries. It would be somehow a sort of advanced certainty process that could be implemented. I think, Felicie, you alluded to that in your presentation. And this assessment could be valid as long as the fact patterns described remain the same, a little bit similar to a ruling mechanism. In the same spirit, we believe that a specific point of interpretation of the rules could be confirmed through this process, with the interpretation being binding on all countries where the MNE is based, for IIR, for UTPR, but also for QDMTT purposes, again, to ensure consistency, security, and coordination in the way the interpretation is performed by the various countries. So that is a framework that we really encourage the inclusive framework to work on, because we believe that everyone could be winning. I mean, more and more countries are foreseeing a cooperative compliance. They really encourage MNE to go and speak to them at a very early process. As you said, Marco, I think this pillar 2 should clearly be part of those processes, and MNE should be able to receive certainty as early as possible and to try to avoid as much as possible complex discussions in various tax audits. I would like to conclude this part by saying that the easiest way to give tax certainty to MNE is also through long-term safe harbors and simplifications in countries where there is no top-up tax at stake, and in order to focus the effort of both the taxpayers and the authorities on actual low tax situations. Now, you asked me what were the expectations of MNE in terms of a dispute resolution mechanism. First of all, I think MNE hope that the dispute resolution mechanism will be of very limited use, because it will mean that the dispute prevention mechanism has been very effective within inclusive framework countries, thanks in part to the measures that I touched upon a little bit earlier. Now, we recognize that there may be cases where there will still be disputes between two countries, because there are sometimes complex operations of the rules. For example, in case of a POPI or MOPI, there are many cases where there could be dispute as to the taxing rights. So in this case, what we would expect is that such a mechanism, whatever the instrument that is used, should be efficient and should limit the time and resources spent by both MNE and authorities on the matter. We think that there should be a binding obligation placed on the countries involved to resolve the dispute, with the maximum amount of time allowed for the resolution, a little bit similar to what has been foreseen, I think, for amount A. And it should apply irrespective of whether there is an existing tax treaty between the various countries involved in the dispute, because Pillar 2 goes well beyond the existing network of tax treaties, and we think there should be a specific procedure that should apply in that case. I will conclude that point by saying that, of course, Pillar 2 should be incorporated in the existing MAP process, because a transfer pricing adjustment could have some top-up tax implications. And of course, this should be factored into the discussions as early as next year, when Pillar 2 starts to apply in most of the countries. So these are the main comments I wanted to make with respect to your questions, Achim, and I hand it over to you.
Thank you very much. And I hope now we're going to try Jason again, and we hope that we're going to be able to hear him.
Do you guys hear me now?
Absolutely. Wonderful. Great. Jason, the floor is yours.
All right. Thanks, Achim, and sorry about the technical difficulties, but I do appreciate the opportunity from the OECD and the Forum on Tax Administration for the invite and to share P&G's perspectives on tax certainty and Pillar 1. I thought I would start a little bit with our general view on tax certainty because I think it gives the lens on how we think about the provisions in the MLC and how we also think about Amount B. Tax certainty and transparency with governments has long been one of P&G's core tax principles. We have a shared interest with governments to ensure predictable, efficient, and rule-based tax administration. Where possible, we seek certainty from tax authorities, including engaging where we can in bilateral advanced pricing agreements. In addition, we aggressively continue to close open tax years where we can. In addition to APAs, we have invested in other certainty programs, including country-specific cooperative compliance programs, and we're part of the initial ICAP pilot project. Much of our approach to certainty, as well as generally our approach to tax, is described in our publicly available approach to tax document. We estimate that our portfolio of APAs results in income tax certainty for P&G and tax administrators of more than 70% of our global earnings. So overall, we believe that tax certainty is a critical aspect of a properly functioning international tax framework and enables the efficient allocation of resources for MNEs and tax administrators. And importantly, it facilitates predictable and sustainable financial outcomes that benefit all stakeholders. So with that as the backdrop, more specifically how we think about tax certainty under Pillar 1 in the MLC, I do want to start with a comment that we do have concerns generally with designs of both Amount A and Amount B, given the complexity and the way we see it, the lack of our ability to intuitively understand the tax implications of basic business decisions. In our prior submissions to the OECD on Pillar 1, we laid out several criteria we thought were important for the project to deliver its stated objectives. And these criteria included predictability and sustainability for all taxpayers and tax administrators, uniform implementation that provides certainty and mitigates double tax, no material deviation from economic business reality and value creation, no ring fencing of business models or industries, creation of more accessibility and administrability for developing countries compared to the current transfer pricing approaches, and easy enough to administer that there's not undue reliance on dispute resolution processes. We are concerned that the draft proposal misses the mark on several of these objectives. And with that, the lack of predictability and difficulty in advising our business partners on the implications of their business decisions could lead or could create a step backwards in the overall tax certainty environment. Having said that, we do applaud many of the novel and progressive approaches to dispute prevention and dispute resolution contained in the MLC. We think that these elements may offer possible building blocks for future dispute resolution and prevention approaches that may be attractive to both business and tax administrators. Even if the MLC is not ultimately ratified, we do encourage the OECD and the inclusive framework to continue to explore ways to incorporate the positive elements of the MLC certainty and the MAP provisions into the existing tax treaty framework and dispute resolution mechanisms. So in our mind, many of the top positive aspects of the MLC tax certainty provisions, and these will be very similar to what we heard from Siram and what we heard from Tim, the creation and focus on advanced certainty provisions that can provide forward-looking and binding multilateral certainty. We view these as similar to an APA. You know, the intent is to get advanced certainty and get binding certainty over a future number of years that binds all affected parties. Those are critical to a successful certainty framework. The creation of a robust and binding certainty process that is designed to amplify the existing double tax treaty network. This approach, in our mind, has the potential to be a consistent mechanism to resolve a wide range of tax disputes on complex issues such as transfer pricing, business profit attribution, and withholding tax characterization. The introduction of strict deadlines. We view these deadlines combined with the knowledge that once a taxpayer is admitted into the certainty process, the outcome will be binding for all, and this should give everyone confidence in the overall process. The creation of the determination panel. We view that as a very positive development because it would be a singular body that is responsible for delivering binding outcomes when no outcome can be achieved by other certainty processes. In our view, the existence of this panel and other binding arbitration mechanisms, as opposed to their actual operation, will help focus all the stakeholders on actively seeking mutually agreeable solutions and discourage extreme negotiating positions prior to reaching the resort of last arbitration. And then lastly, and maybe most importantly, the apparent lack of objections to the certainty provisions in the MLC. Based upon our reading of the MLC, there does not appear to be any objections to the certainty provisions. And this is a very encouraging sign, as hopefully it illustrates that all countries in the inclusive framework view the mechanisms and the improvement opportunities in tax certainty as very critical goals. And then I want to flip a little bit and talk a bit about Amount B. From a P&G standpoint, the successful conclusion of Amount B is of critical importance to tax certainty efforts globally. If designed and executed correctly, we think Amount B could have a dramatic impact on the simplification of transfer pricing execution and compliance and make for a significant step forward in tax certainty. We think Amount B is an important opportunity for business and governments to collaborate to achieve much needed simplification, and it should be implemented independently of Amount A and should be available across all distribution business models and industries. And ideally, Amount B should be implemented in a binding way, so via multilateral convention or bilateral relationships. And we think that only through widespread adoption throughout the inclusive framework will Amount B deliver on the certainty that it was initially promised and it can achieve. So perhaps this is the most important comment that we would make about Amount B, that we believe widespread certainty or widespread adoption is important, and that may be more important than some of the more detailed design considerations that we know are still under review. We do have a few detailed recommendations on Amount B. So taking a click down, we want to make sure that there is full transparency of the OECD benchmarking approach, that we understand and we have detailed definitions of the key ratios, industry groupings, and non-baseline activities. These will be important to prevent controversy under Amount B. We are looking for simplified execution and reduction of documentation versus today's requirements. And then we want to ensure consistent measurement requirements on important financial metrics such as pass-through costs, again, to avoid complexity and increase certainty. So then maybe just to conclude, just a few final points that we wanted to make on tax certainty in general. We definitely think tax certainty is a journey worth taking. The MLC and Amount B have provided some very positive steps forward. And these are steps, as I said at the start, that should be further explored and developed in other ways. In some ways, tax certainty may require a different way of thinking for all involved. In our experience, the most complicated tax disputes resolved through collaborative efforts. It's an investment in transparency and collaborative working relationships between all stakeholders that are seeking a good outcome. And then lastly, it's important to develop dispute prevention and resolution processes that appreciate pragmatic solutions. These are complicated issues we're dealing with. Quite often, the most theoretically correct decision may not be the most practical one to implement. And it's important that as we think about tax certainty, and in particular under the pillars, that we don't let the perfect be the enemy of the good. So those are my comments, Akim. Hopefully they are helpful. I do think the tax certainty provisions in the MLC are a great step forward, and we should all continue to invest in making sure that they meet their full potential.
Thank you, Jason, and thank you also that you have returned your voice and we could hear you. So I think we've gone the full range. You've had a little recap on where we are, I think, from Sriram and Felicie, Tim, who did not go into detail, but did and gave us sort of the kind of conceptual architecture, I think, of all the thinking that went in and the level of detail. Jason, as you can also see, there's a lot of thought that has come in from a lot of countries, which is why you have something that is quite detailed, but also that's necessary. So you actually get to certainty, even at the risk of adding pages to it, so you know what you're getting into. Thank you also, Oki, to take us through the default lines, everything that was built here. We've heard from Maida on amount B and Jason on you reflected this. Marco, quite interesting, everything that's happening in Italy, and maybe that will be a template or so we can react to that. Those are very positive developments, including also what you said about the integration and cooperative compliance program style in Italy and what that would mean. And so I think that's important. Thomas, thanks a lot for your insights on the design and the options of moving, also thinking, as you said, risk assessment systems, other aspect as we think about the compliance, and couple this also with dispute resolution, that while that shouldn't be the primary, we always know we need that backstop, I think. And then also Jason taking us through sort of, the positive aspects that you see in the designs, and I think also so then taking us back to B. So with that, I think we are at the end of this session. I think we will have a short break, and then we will start again, I think, on time at 3 o'clock. So that's just 7 minutes from now. So we stay on time also, that we can run through the agenda. And of course, we will have later on Bob Hamilton, the Commissioner, Canada Revenue, joining us on time. It's Canada to hand out the award. So stay tuned. We'll break for a little bit, and we are back in 7 minutes and continue with Item 4, where I shall hand over to Mark Johnson to take you through ICAP, and you can already apply in the next 7 minutes to join the ICAP program if you haven't done it already or you want to do it again. So see you in a minute. We are ready, and as always, ICAP is ahead of time, so every screen pops up, I can see it. Mark, I hand it over to you. Take us through the next segment. The floor is yours.
Okay, thank you very much, Akim, and welcome back, everybody, after the very brisk coffee break. During the next 40 minutes or so for this session, we're now going to be focusing on the Forum on Tax Administration's International Compliance Assurance Programme, in short, ICAP, for a multilateral risk assessment of a group's key transfer pricing risks. Now, the programme has already been through 2 pilots, and is now a full program open to any group to apply to, with 22 tax administrations participating, and with more also in the course of discussions to join. Now, in a moment, we'll hear a bit more about the program itself and about the value of being found to be low risk through through ICAP, as well as some of the statistics relating to the outcomes of the first 20 cases that have already been fully completed. And there are a number of other cases ongoing at various stages of the process. I'm very happy to say that we'll be joined today by a number of our ICAP alumni. And as we move through this session, we'll have the opportunity to hear from Jennifer Best, Director of Treaty and Transfer Pricing Operations at the IRS, from Michael Dyer, the Director of Global Tax at Steelcase, from Martin Venke, Head of Transfer Pricing for Merck Group, and then also from Laurence Brochet, who joins us as both Vice President of Group Tax for Dassault Systèmes, and also wearing her second hat as Vice Chair of the Business at OECD Tax Committee. So welcome everybody to the panel, and look forward to that conversation. But first I'll move to my colleague Nicole Casey, who leads the work on ICAP within the OECD Secretariat, to talk us through the program a little more and some of the statistics we're seeing coming from the closed cases. Nicole.
Thanks, Mark, and I'll just share the slides. You might let me know if you can see them. So as Mark mentioned, this is the first time that we are releasing details of the results and statistics of the ICAP cases that have been completed to date, and addressing some of the key questions that really come up from taxpayers, tax administrations, advisors when we talk about ICAP publicly. So touching quite briefly, we'll just go over a few key highlights here. We will be releasing a more detailed document in the coming weeks. So just a few of the key highlights for today, which will hopefully provide some color before we move on to the panelists. So firstly, the number of tax administrations that are being covered in ICAP risk assessments. So as Mark mentioned, we currently have 22 jurisdictions that participate in ICAP. This has risen substantially from the first pilot where we had only 8, the second pilot where we had 19 participating, and now today with 22. Of the cases that have been completed to date, the largest risk assessment has involved 9 tax administrations, and the smallest has involved 3, with the average being around 5. And quite interestingly, despite the fact that the number of participating tax administrations has continued to grow, that average number of participating covered tax administrations has remained relatively consistent at 5. Looking at the outcomes, which is a question that comes up quite often, we have 5 core risk areas that we cover: tangible goods, intangibles, services financing, and risks related to permanent establishments. Built within that, when the tax administrations are reviewing these transactions in conjunction with the MNE, with the taxpayers, they also look at how that TP policy is applied. But given the fact that we can't really bifurcate that TP monitoring from the risk areas to which it relates, all of that is incorporated within those relevant risk areas. So within the selection stage of ICAP, the MNE and the tax administration will come together and coordinate to determine the risk areas that will be covered in scope for the risk assessment. So at that point, when we're talking about selection, some of those risk areas may be scoped out for a number of reasons, which we'll go into in more detail in the full publication, but just very briefly, sometimes it might be materiality, complexity, there may be an ongoing MAP case, an ongoing APA. There are many reasons why transactions may be scoped out, but the data presented here represents the outcomes for each of those core risk areas for transactions that were considered within scope. So for tangible goods, for example, 90% of those transactions that were reviewed were considered to be low risk, and the remaining 10% were considered to be not low risk. I know we're tight for time, so I won't go through each of them in detail, but they are presented there. And one thing I guess it's important to point out at this juncture, and what we get asked quite often is, what does low risk mean? What does not low risk mean? So a low risk outcome simply means that tax administrations don't expect to dedicate further resources into making inquiries into those transactions that are considered to be low risk for the period that is covered by ICAP, which is generally 2 years, and in some cases, in certain jurisdictions, for a roll forward period, which may be an additional 2 years. And what we'll hear from the panelists that will follow, what we're seeing in practice is that those low risk outcomes are being respected by tax administrations. So where they are endeavoring not to give any more resources to looking at not low risk transactions, that is what is happening in practice. Conversely, then, what does not low risk mean? It's simply the absence of the tax administrations being able to reach a low risk conclusion for a particular transaction. It could be for a number of reasons. Again, we'll cover these in a little bit more detail in that full publication. Materiality is something that does come up time and time again, but a really important point to note, and I guess maybe a bit of a misconception that's out there, is that a not low risk outcome does not mean that a transaction is considered high risk. It simply means that the tax administrations at that point could not reach low risk. Moving on, what we see then quite unique to ICAP is this concept of issue resolution. It's something that doesn't really exist in any of the other tax certainty tools that are available to taxpayers. And broadly, it just means taking steps to resolve an issue within the ICAP process, which then helps us avoid the need for separate inquiries. So for example, you may be able to agree a transfer pricing adjustment and a corresponding adjustment in ICAP, thereby avoiding the time that needs to be spent in an audit or map. So in the cases that we have completed to date, 32% of those have invoked that issue resolution process in order to try and address any issues that have come up as part of ICAP. Worth noting that issue resolution is available in ICAP cases on a case-by-case basis and dependent on the jurisdictions, but extremely beneficial for those cases where we have been able to utilize it. A subsequent question that comes up quite often is, how long does this all take? And I know we've talked a lot about the MAP timelines today, and that's a question that we get a lot, and how long is it taking in practice? So each stage of ICAP, selection, risk assessment, and the outcome stage, has a target timeframe, which is set out in the ICAP handbook, publicly available. And they're represented by the green and the blue bars on the chart that you see here on your screen. So for selection, 4 to 8 weeks is the target time frame. For risk assessment, 20 to 36 weeks. And then for outcomes, 4 to 8 weeks. So as you can see, our timelines are slightly exceeding what those targets are. So to date for selection, the average time taken has been 10.4 weeks. The average time for a risk assessment is sitting at 42.4 weeks on average, and the average time for that outcome stage is 8.3 weeks. Again, there are a number of reasons, I guess, why those timelines have exceeded the target. This is a relatively new program, a relatively new way of working when we look at multilateral working with up to 9 tax administrations at one time, and also bearing in mind the COVID-19 pandemic, which caused a need to move to that virtual way of working. So all things to take into account, but quite interestingly, regardless of the timelines being a little bit longer than what the targets are, it is important to note that they're significantly less than what we're seeing in MAP and in APA. So for an ICAP process from selection through risk assessment through outcomes, we're looking at in and around 61 weeks as a total time frame. If we compare that to APAs, which arguably is the most direct comparison to ICAP in that dispute prevention space, we've taken publicly available data from the US, the UK, and Japan, who are 3 of our ICAP jurisdictions, relating to completed APA cases. And the average time that takes is around 166 weeks. Keeping in mind as well that is usually, although not always, bilateral, and dealing with very specific transactions compared to the much wider scope of an ICAP and the much more multilateral nature of that working. If we then look at MAP cases, this is based on the 2022 data, which Sandra presented earlier. The average time for transfer pricing cases is just under 126 weeks, or 28.9 months. While not directly comparable to ICAP, I guess it is important to consider that dispute prevention is in the hopes that we do not need to incur this time when you get into dispute resolution processes. So it is still important to look at ICAP versus those MAP timelines. 2 things to note here. Firstly, this relates to all transfer pricing cases. So as was mentioned earlier, those post 1 January 2016 cases are being concluded quicker than historical cases. But also the above timeframe doesn't include the audit that typically precedes a MAP, and that time can be quite substantial as well. So worth bearing in mind that there are nuances when we consider this, but overall we can see that the ICAP is much quicker and much more flexible, hopefully covering a broader range of risks, getting more tax administrations into the room. So what does that mean? What's next? Like I mentioned, in the coming weeks, we will publish a a more detailed document that shows these statistics and some observations to provide a little bit of color from that tax administration perspective. For MNEs that are on the call, anyone interested in applying for ICAP or even just learning a little bit more about what it might involve, we would consider you to reach out to the tax administration in the jurisdiction in which your group is headquartered. If they don't currently participate in ICAP, please do reach out to the OECD. The email is on the screen. Equally, for tax administrations that maybe aren't currently in ICAP but are interested in finding out more about joining the program, we would again encourage you to get in touch. There are 2 application deadlines a year for MNEs, the 31st of March and the 30th of September. But I think I will pass on to Jennifer now, who's going to provide a little bit of color on those statistics from the tax administration perspective. And then most importantly, I think we'll hear the perspective from those MNEs that have gone through ICAP and what that meant and how they benefited from it. So Jennifer.
Okay, well, I think
sorry, Mark.
If I just jump in to observe that you're absolutely right, Nicole. I mean, we've only had a few minutes today, and I think this was really just the tip of the iceberg in terms of the analysis that has been done. And in the coming weeks, there will be a more substantive set of statistics, including some observations and analysis that will be made publicly available. So we won't be making the specific slides that Nicole has presented available after this event, but in the coming weeks, they will be included in the publication on the website. Now, just to put people's minds at rest, the Secretariat collated this data based on anonymized information that was provided to us, and we don't see anything within a group's actual risk assessment. We don't even know who is participating in ICAP from the group perspective unless somebody comes forward and makes that known to us. But moving on to the panel, and Jennifer, as someone who has been directly involved in a number of the ICAP cases from the perspective of the IOS, can you give us some context to the statistics that we've just heard, and perhaps if there were already some lessons that have been learned that will benefit the program?
Thank you, Mark, and thanks, Nicole, for having me here. I would love to do so, Mark, and I speak on behalf of the entire ICAP group of tax administrations, and we are really excited to share the statistics today, and we're looking forward to the wider release shortly after this, as we believe that these will help aid in the consideration of ICAP as a tax certainty option going forward. First, I wanted to mention, you mentioned that this represents the completion of 20 ICAP risk assessments. And I wanted to note that while that number is very small in comparison to our MAP and our APA inventories, it is sufficient to demonstrate that we've tested the ICAP concept and that it has been proven that a multilateral risk assessment can work as a standalone treatment stream. And I look forward to hearing from Michael Dyer and Martin in a bit, as they will reinforce that message, I think. A note on the time frames that Nicole walked us through. As she mentioned, ICAP is faster than the MAP and the APA processes. And as a group of tax administrations, we do expect and plan that those timeframes will come down a bit over time. I mean, there were several, those timeframes right now, they reflect a couple of important things to take into account. First was, the learning curve we all experienced in the first 2 pilots. We especially all had some time lags as we figured out what our outcome letters would look like and other things like that. Of course, the second pilot was very much impacted by the pandemic. But other factors will continue to affect the timeline of an ICAP risk assessment going forward. And one of those is the complexities of the issues being risk assessed. You know, we want to take on more complex issues because we think that that does increase the value of the time spent, but the more complexity does mean it will require a little bit more thoughtful analysis and more discussions between us and the MNEs to get a full understanding of the MNEs operations. And also, you know, whether our risk assessment involves the informal issue resolution that Nicole mentioned. That does add time to the timelines. And I think Nicole showed the statistic that showed that in almost a third of our cases, we have been able to achieve some sort of informal issue resolution. But there is a trade-off that does add a little time to the ICAP timeline. But I would argue that is time very well spent. And we like to say that informal issue resolution is one of the greatest benefits of ICAP. So even considering all of these factors, and you know, the data does show that the ICAP risk assessment takes less time than the other existing dispute prevention and resolution options that are available today. Turning to the information or the data Nicole showed about the risk assessment outcomes, she did mention that sometimes certain risks are not in scope. And I just wanted to mention the two most obvious, just in case it hasn't occurred to somebody. If there's already an APA that covers a certain issue, you know, we don't rework it in ICAP usually. And secondly, there may be an issue or a transaction that doesn't exist for one of the participating ICAP tax administrations. So those would, you know, those are the two most common reasons that something is not in scope. But diving a little more deeply into what that slide showed and what the data showed, I wanted to just take on the fact that one of the criticisms of ICAP has been that it won't work from a practical standpoint because what one country sees as a very low risk, for example, very large profits in their jurisdiction, will inherently be viewed by the counterparty jurisdiction with thin margins or losses as inherently high risk. And to a large degree, the summary of those risk assessment outcomes that were on the slide earlier, it demonstrates that for the most in-scope issues in most cases, tax administrations have been able to arrive at a shared low risk determination. And as might be expected, and as the data shows, this is more challenging and difficult in certain issues than in others, in particular with the financing and the tangible transactions. And that's what we expected, and that's what the data on the slide shows. So Mark, those are a few of my thoughts.
Thank you, Jennifer, and important notes to emphasize. And I think you're right that maybe spending a few more weeks in ICAP, but if that means that you can either reach a low risk outcome or indeed resolve an issue entirely so that it doesn't need to be looked at because you've actually addressed the risk through ICAP. Hopefully that is certainly something people see as worthwhile. So quickly moving on, I think for many groups that we speak to about ICAP, they would question why a group might choose to look at ICAP rather than going into an APA. So very quickly, could you describe the differences between the two programs from a tax administration perspective and where you think one might be more suitable for a taxpayer rather than the other?
Yes, and we as a group of ICAP tax administrations, we hear the same thing in our own jurisdictions as we talk to companies and as we talk to the advisor groups. So this is something that we have given a lot of thought to. And we continue to encourage MNEs seeking certainty to consider ICAP along with APAs, because it really depends on the taxpayer's business and operations. And sometimes ICAP might be the better solution, sometimes an APA might be the better solution, and sometimes ICAP is a better first step solution in the tax certainty journey. So, for example, you know, a situation that's particularly well suited for an ICAP risk assessment is where an MNE has operations and transactions that are very similar in a number of ICAP jurisdictions, because ICAP provides an opportunity to get a number of tax administrations together to review those similar operations all at the same time using the same information. So there's efficiencies, and then the counterparties that I mentioned earlier, we're all in the same room talking together. I mentioned that ICAP might be a good first step on the tax certainty journey. And, you know, by this, what I mean is that ICAP might help to identify transactions that may justify the resources that are required for an APA. And indeed, coming out of some of the ICAP risk assessments, some transactions have moved on to the APA process. ICAP could also serve as a good, faster, and less resource intensive, hence cheaper option and alternative for an APA renewal. Instead of coming in for a renewal, perhaps come in for an ICAP risk assessment. We do recognize, however, that ICAP does not provide the same legal certainty as an APA, but there are all these other benefits to consider, some of which Nicole mentioned earlier and what I have just mentioned. And just to reiterate the point, practically speaking, once a tax administration opines that something is low risk, there's no incentive for us to spend additional time and resources on it. But as Nicole mentioned earlier, a not low risk determination does not automatically equal a high risk determination. And practically speaking, it has not resulted in an audit in all cases. So there are a few thoughts with the compare and contrast with the APAs.
No, thank you, Jennifer. So through ICAP, we're not trying to replace an APA, but in some cases, there may be transactions where we can provide multilateral certainty more smoothly through ICAP, keeping APAs for those transactions that need that more intensive process. So moving on, Michael, Steelcase is a group that has been through ICAP, and on this issue of ICAP versus APAs, from a legal perspective, the certainty you get from ICAP that there's no expectation of further inquiries for potentially 2 years plus 2 years of roll forward is different to an APA. But in practice, what do you see as the benefit your group got from getting a low risk outcome from ICAP?
Thanks, Mark. I just want to start by saying thanks to you and Nicole and to the OECD and fellow panelists for being able to participate today, to have Steelcase be on the panel. Very happy and thankful to be here. So thanks for the opportunity. For those who don't know Steelcase, we design and manufacture furniture and provide services mostly for office environments, but also for educational and healthcare settings also. Many of you today, hopefully, could be sitting in Steelcase chairs, and hopefully you are, no matter where you are in the world, or at a Steelcase desk. So we manufacture around the world in the Americas, in an EMEA, and an APAC, and we have sales offices that are close to our customers. So we're a global company. We have about 3 billion of annual sales, a little more than 3 billion, and we're coming back after the pandemic, because you can imagine office settings have been impacted. And we have a level of complexity, I would say, for a 3 billion company. We have what I would say, a small tax team. We have 10 tax professionals in a decentralized way. We have 4 in Europe and we have 6 in the Americas. And we are, we're all trying to handle all areas of tax. We have no transfer pricing full-time team. We're doing tax compliance, we're doing tax accounting, we're doing transfer pricing, audit management, and planning. So our small 10-person team for our 3 billion company, we have to make sure we're efficient and we're focused on the right things. We want tax certainty. Again, with our global complexity and our small team, we want tax certainty. We have one APA globally right now in a jurisdiction, and it's a unilateral APA. So for us, the ICAP program was really important, and I loved what Jennifer just said. It's a starting point on maybe on a continuum, and it was valuable to us, Mark, to get to your question. It was valuable to us because even though it didn't provide legal certainty, it provided us with practical certainty that we have been transparent in our cross-border operations. And there's a level of trust that, you know, in sharing transparently what we're doing, we're trusting that even if something isn't perfect, that we can work together to fix it. Or if it is okay, then we have that level of tax certainty without having to go to the APA level or further on Jennifer's continuum, which I love that. So I would just say a lot of complexity, small team, want certainty and efficiency. Those are all the reasons why it made sense for Steelcase.
Okay, thank you very much, Michael. So as you say, from a legal perspective, the certainty is different, but in fact, if in practice we can avoid audits, we can reach certainty through discussion, then maybe the benefits are as tangible from a practical perspective.
Absolutely.
Looking beyond just the low risk outcomes that you might get from ICAP, do you see any other benefits from having participated in the program? Perhaps thinking slightly more widely. I'll keep talking while you turn your lights back on.
But I didn't move enough. No, absolutely. You know, Steelcase, we're proud of our reputation. We are in the US CAP program, and we've been in the CAP program, it's been like 15 years now. So we have a reputation for being transparent and trying to get things right. We're also one of 2 companies in Michigan, only 2 companies in Michigan to be in a state CAP program, so Michigan CAP. And when we learned about ICAP, we're already in 2 other CAP programs. We just welcomed the opportunity to continue to build our reputation for transparency. And so we want to show that Steelcase is trying to get things right, and we do believe it helped our reputation. And it also, you know, for us and me personally, was very valuable to just have the discussions and hear the communication from the authorities, to hear how the authorities are thinking about transfer pricing, not just the results, but also documentation. So the roundtable that we had halfway through the pilot was very helpful, just to have the open discussion with authorities about how we're thinking about transfer pricing. Personally, to me, that was very valuable to hear that discussion. And I just want to share a quick story that I thought, you know, it demonstrated to me, and it just helped my trust in the system to show the open communication lines. So when we got into ICAP, we had an IRS team who was assigned to us, who was really fantastic. And they said part of the ground rules is if a country accepted you into ICAP, that they would not audit you for transfer pricing during that ICAP period. And, you know, again, we have nothing to hide, we're transparent, but we said, okay. Well, during the ICAP process, a few months in, we did a local audit was initiated for one of our European jurisdictions. And the transfer pricing auditor started asking questions. And our local controller was managing the audit locally, of course. And they said, I thought we weren't supposed to get questions on transfer pricing during ICAP. And I said, well, we're not. And I said, well, just tell the auditor that we're in ICAP and that, you know, we, you know, to take that part off the table for the audit. And the auditor didn't. The auditor kept asking questions and was demanding information. So I talked to the IRS and said, you know, we'll provide information, but I thought it was part of the ground rules where they wouldn't be asking transfer pricing questions in an audit. And within a day or two, maybe like the next day, the local auditor told the local controller, you're right, forget it. And the local controller called me and said, I don't know what you did, but that was amazing. And really to me, it showed me that the ground rules were respected and that the communication channels were wide open and that, you know, we can trust the process. So that helped me a ton. And I think the last point, Mark, just on extra benefits beyond the low risk outcome is, again, with our small team, we're all working in a very complicated international environment that's only getting more complicated. We've got Pillar 2 coming. We've got e-invoicing requirements coming. We have more and more requirements for information. And the fact that we have the reputation at Steelcase that we're transparent and getting things right, I think can only help us in this increasingly complex world where we're all trying to comply with the rules. And I'd really rather be on the side of transparency and cooperation rather than the other side. So I think that Steelcase is positioned as well as we can be with our small team for the future and everything that's coming.
Thank you for the story. And I think we can all agree that as ICAP becomes more bedded in and becomes more better known, hopefully the issues that arose in that particular case wouldn't happen. But the fact that the audit was ended immediately, so there would have been an audit which no longer happened, demonstrates that the benefits from having been in ICAP are real. Okay, so moving on, and also with an eye to the time, but I do want to capture all of these examples that I think it's important people hear from groups. So moving to Martin, as I mentioned before, the Secretariat actually gets very little information about who is in ICAP, but I understand from yourself that Merck participated in one of the pilots and will be represented in the statistics we saw earlier. But since then, you've re-entered ICAP for a second review, which isn't included in those. So that's great news that having been through ICAP once, you wanted to see it again. Can I ask what the thought process was for Merck in deciding to come straight back into ICAP?
Yes, Mark, you can. Thank you for being invited to the panel. And just to comment briefly on who we are. So Merck is a German-based family-owned business since more than 350 years. We have 22 billion of sales basically everywhere around the world. And we are dealing with pharmaceuticals, with life science business, and also with the electronics business. So we consider ourselves being a responsible taxpayer who fully cooperates with the tax administrations by fulfilling the respective compliance tasks. And I guess I will repeat basically what Steelcase just mentioned, right? So we firmly believe that transparency and a direct proactive cooperation between us and the tax administrations is key for resolving potential international tax disputes. So the well-known, rather long-lasting procedures like APAs and MAPs are, at least from our point of view, not entirely sufficient to cope with those requirements, right? In those procedures, you are limited for providing input, but you're not actively involved into any subsequent discussions. So and there's a quite nice thing out there. This might fit to the situation. If you're not on the table, you're on the menu. And from our point of view, ICAP in contrast aims for an open, transparent, trustful, and cooperative atmosphere, right? And in our opinion, as just mentioned, ICAP may even go beyond of just getting outcome letters with low-risk judgments, but therefore also aims to learn from each other and to get, again, a better understanding of the other side. So, and this may also allow identifying potential challenges in advance and thus giving us the opportunity to avoid future tax disputes. There's also quite a nice story around our first ICAP participation. So Achim Bross, who's around today, was the key speaker at one of our tax conferences back in 2019, and he focused, of course, on the topic of tax certainty. And right thereafter, we have been invited for participation, which we did, of course. So And as you can imagine, so our first ICAP pilot was a rather uncertain journey into a new topic for us, but also then for the free participating tax administration. So we're basically the first small case which were presented by Nicole some minutes ago. But since our ICAP program was very well managed by the German tax administration and also fully met our expectations in terms of the overall goal of the program, which is a kind of bird's eye view like review, but not an in-depth tax audit. So that's why we thought it's worth to participate then in a further round of ICAP and to make it even bigger. So our current ICAP program, which is close to finalization, covers now 8 countries with more than 30 MAC legal entities with a focus on Europe and America. So the first ICAP was a big success for us, achieved the goals which we had in mind, and that's why we targeted to go for a second one, and also the second one was very successful.
I think it's great to hear about the evolution of your experience from the first program to the second program, and in particular that having been at ICAP makes you feel that you're at the table rather than on the menu. So I think that's a good takeaway. So again, briefly, and now as you're coming towards the end of your second ICAP review, are there any other thoughts that you'd like to share in terms of the benefits that Merck has felt from the ICAP program?
Yes, so maybe let's start with the end of the process, right, which is then the receiving of the outcome letters, and we received predominantly a low-risk assessment for all of our transactions, and an issue resolution phase was not necessary. So neither on the first ICAP nor on the second one. And in the second ICAP, we even tried to be ahead of time by using the program for solving a rather simple case of double taxation, but due to the specifics in the tax law, so it was not possible to implement then the respective changes just like this. But nevertheless, this does not influence the overall success of the program, right? So by looking on the low risk assessment, this basically means for us that our processes have been in very good shape over the entire life cycle of transfer pricing. And even if this outcome is not binding yet for local tax purposes, and maybe this will change going forward, which would make then the program even more attractive for taxpayers, such low risk outcomes may even help us in other tax audit situations in non-ICAP countries by just presenting then the letter stating, okay, other tax administrations have assessed us as low risk for very similar transactions while you're asking us questions in this regard. But also beyond this, so the outcome also helps to focus on even other transactions for which we have not yet received a low risk assessment, right? Maybe just because of deviating views of the tax administrations on specific topics. So Nicole mentioned, for example, then financing transactions, or there might be even room for improvement on our side since nobody is perfect. So, and in particular, our second ICAP session showed us that all participants constantly learning from each other and by gaining, and I repeat myself, a better understanding of the other side. So in particular, our in-person meetings here locally in Darmstadt involving then the 8 tax administrations, but also then the colleagues from the foreign countries contributed a lot to this common understanding. And we visited together with the tax administrations our side, shared insights, what we are actually doing, making this more tangible for the tax colleagues. And this, I guess, helped a lot to provide them common trust, a common understanding, to be transparent and open. And at the end, the processes were both very well managed, as mentioned before, by the German tax administration, and also then the US contributed a lot to making then the programs overall successful. And as a kind of final statement, right, so we strongly believe in the usefulness of our ICAP program, or of the ICAP program overall, as an additional tool to achieve tax certainty. And based on our experience, we can just encourage other multinationals and especially other tax administrations to participate in ICAP so that the full potential of this instrument can be realized going forward, right? And we, for example, even think about participating then for a third time on ICAP, and then with a more focused on Asian countries, since, as I mentioned, right, the initial programs focused rather on Europe and on Americas, but Asian countries were rather limited focus on. So overall, very good success for us, and we think it's a helpful instrument also going forward.
Well, thank you very much for that in-depth view of life within an ICAP, which I'm sure is of interest to listeners today. And it's great to hear that groups having been through ICAP can't get enough of the programme and came back a second time and may even be considering coming back for a third time. So we look forward to hearing from you in future events. So moving on quickly to our final panelist, Laurence. First of all, speaking as the Vice President for Group Tax for Dassault Systèmes, you've also been through ICAP, and can you describe very quickly what you see of the benefits to the group, and perhaps any thoughts you've had in terms of how much time spent in ICAP perhaps saved resources and time you needed elsewhere?
Thank you, Mark, and thank you, Nicole, for helping me preparing today, and thanks for giving me the floor. Right, what I want to say is that what is ICAP? ICAP, it's trust, it's collaboration, and it's transparency, and it's positive outcome. That's what I wanted to say. What is very important is the trust element. It's a relationship, so it's a give and take element. There's this element of trust which is important, and it's not just trust between the tax authorities which are participating and the taxpayer, but it's also, I believe, trust within the different tax authorities altogether, because somehow it's making them reviewing one global topic all together in the same room, even if it's virtual, because they're mostly on the phone, but it's making them reviewing the same topics together. So that's one of the strong benefits, I think, from the taxpayer. Martin was saying that, actually. I was really pleased to hear what everybody Martin was saying, because it's really what the feelings we had during the ICAP. So trust as well, it's important on both sides, because transparency, indeed, the taxpayer has to put everything on the table, but trust is also, if there is a positive outcome, which turns out to be in a low risk assessment letter, which is mainly what we obtain at Dassault Systèmes, my group. It's also indeed no tax audit during of the transfer pricing which have been reviewed and the flows which have been reviewed of that period, and it did really work for us. So even though it's not a legal certainty, it is a practical certainty at the end of the day, because we did not get tax audited on the flows which have been reviewed. And when we had tax audits on these years, we provided the tax assessment letter of the tax authorities of that country. Sometimes they were not aware of it, but they even didn't start the audit. So that worked for us. Now, in respect of returns for us and time and money saved on this, what we kind of allocated in terms of time is that we believe that it saved us half an FTE per tax audit. So I have, unlike one of the company was discussing Steelcase, I do have a large tax team here dealing with transfer pricing with very good specialists, and Zachary worked with me on this and did most of the work on the ICAP process. So it saved about half a person, an FTE full time per tax audit, which is important time. In respect of money savings, because we have to deal with foreign tax audits and foreign tax authorities, sometimes you have issues of translation, etc. So even if my department is large for transfer pricing, we do need help locally. And we believe that this would save us per tax audit something between 50 to 100K. It could be even more if it's a large issue. So at the end of the day, it saves us time. It saved us money, and it saved us people time as well. So here we are. I hope I haven't been too long.
No, and thank you. It's important to hear that everybody has limited resources. And so while there is clearly an investment in ICAP, the fact that overall there is a benefit to the group in terms of the time and resources needed elsewhere, I think is an important message. And now I know we're all already over time, but just very quickly, wearing your second hat as Vice Chair of the Business at OECD Tax Committee, what do you see as the value of ICAP for your members sitting alongside other tools such as APAs?
So we have indeed, there is a tax certainty group, and we've been working on ICAP to start with. So we are preparing a document to work on, to push MNEs to get into the ICAP process. So we're going to describe it a bit, provide some testimony, also demonstrate the advantage of it, but also work on what's next. And on that, obviously, we will discuss with you and the group that you're working on with all the tax authorities. We also have decided to capture exactly what MNEs are expecting. We've also decided to launch a survey to get their view of what they're expecting from ICAP, because I think that will maybe help us to work out better the document that we want to produce. There are two strong elements which are coming up often, which is indeed the certainty. People are afraid that the fact that they won't be audited will not be respected. So that's one item, but also getting into the ICAP, they don't always really know what they're getting into. So that's what the document will be on mainly. We will deal with other tax certainty, like withholding tax topics later on, but for the moment, we're focusing on ICAP. So here we are. And thank you so much for giving me the floor. Thank you.
Thank you for those comments, and we look forward to hearing the outcomes of your work so we can ensure ICAP does indeed respond to the request from business. So thank you very much to everybody for those comments. And literally, if we can just be in a few sentences, Jennifer, if perhaps there's anything you want to respond to the comments from business, and perhaps what message would you give to a tax director who's thinking about ICAP coming out from today?
Yeah, I just, again, representing the ICAP group of tax administrations, we really appreciate the participation, the feedback of all of you, and Laurent, Martin, and Michael, and your participation in Tax Certainty Day. And we are always thinking about how to improve the program and make innovations and changes. So we are open to feedback from all of you and from others anytime. Please reach out to any of the participating tax administrations or the Secretariat at your convenience. And I guess just to any prospective MNEs, we are open for business. It's tried and tested, and we hope to work with you on an ICAP risk assessment. Thank you, Mark.
Okay, thank you very much, Jennifer. Well, I'll just wrap up very, very quickly. I know that we are already 10 minutes over time, but it was a good discussion. Thank you very much to everybody, to the panelists for their contributions today. As we mentioned at the beginning, there will be a more comprehensive statistic that we launched in the coming weeks, which will hopefully go further to dispel some of the uncertainty or the misconceptions that people may have around the programme. Hopefully today has already achieved much of that. And I would just add my voice to Jennifer's to encourage anybody listening who thinks ICAP might be a fit for their group, or indeed just be a fit for part of their group, to come forward and speak to their lead tax administration or to the Secretariat, and we can share more information. With that, I say thank you very much again to everybody and pass to Achim.
Thank you very much. Can't get enough. I think that's a good message that several of you have said. Thank you, Martin. Thank you, I guess, Laurence, Michael, everybody, Jennifer, to build all of this out. So there's a great product out there. Use it, I think, and we're all ready for all questions that you might have, and so are all of these. And also thanks for the support from BIAC on this. Now, moving on to tax certainty around the world, we're running about 10 minutes late, so maybe we will cut into our closing remarks to make up time. But without further ado, very important session. I think, Sandra, you will take us through that session. Over to you.
Thank you, Achim. And it probably shows the difficulty that competent authorities have, because already when they need to come in the new map, things are very late. So no pressure on the competent authorities here today. But yes, please, let's all be complete and brief at the same time. Now, just to give you an introduction, our tax certainty unit was created 4 years ago, but of course our work on tax certainty started a lot earlier. Not surprising, because tax certainty is very important for governments and for business. We've talked about that many times in the past. But if we quickly look at resolution, we see that APA and MAP have been there, of course, for many years. Recently, we published the manual on bilateral APAs with best practices for taxpayers and tax administrations. We have the manual on multilateral maps and APA with a focus on legal basis to do these procedures, and then touch upon the procedural issues that are related with the choice of the legal basis. And then as from next year, we will also start publishing APA statistics, because they do provide a lot of extra information, and they are important to get a more complete picture of a jurisdiction's efforts on tax certainty. Now, apart from that, we have, of course, since 2008 arbitration in our OECD Model Tax Convention. We had a commitment by some 20 jurisdictions in that final Action 14 report to include arbitration in their treaties. We had more than 30 jurisdictions opting for arbitration in the MLI. And in the pillars, we, of course, are also working on binding dispute prevention and resolution. Now, if we focus on prevention, we see that one of the first outputs we had with respect to cooperative compliance dates back to 2008 as well. Several other documents have followed since then. In 2010, we had the first report on joint audits with an update in 2019. And then the last 10 years, we have seen a lot more on risk assessment with exchange of CBC reports, with a handbook that points out the do's and the don'ts with respect to the use of these reports, which are, of course, very relevant for tax certainty. And then the creation of ICAP, and we heard all about that in the previous session. Now, and I've heard it said, but I want to stress this, there is no competition between all of these tools. All of them are important, each have their own use, each are relevant in a specific situation. And I would say they're even more complementary than each other's competitors, because it just depends on what you need at a certain moment, what you will do. But let's now go and look where we are in this journey in different parts of the world. And so I have a panel with Andrea from Colombia, Nicole from the US, Harmark from the Netherlands, Maida from Zambia, and Takahiro, which will provide the Japan point of view. Later on, Michael, we have a small video from Michael Leonard from the UN that talks a little bit about tax certainty. And then we have Gianmarco and Martin, who will give us the business view on tax certainty. But let's start with Colombia on our journey with respect to tax certainty. So Andrea, if I can start with you, and very nice to see you again. Even though Colombia does not have a large map inventory, we do see that through the Action 14 peer review process, Colombia has taken several actions to put in place a strong policy framework for MAP. For example, publishing its MAP guidance, making domestic law, and even constitutional changes to make implementation possible. Could you share us a little bit about your MAP journey and how your MAP caseload at the moment may be indicative of the efforts you have taken to highlight availability and access to MAP?
Hi, Sandra, and hi, everyone, and thank you very much for this important invitation, for giving us the opportunity to share our experience in Colombia with implementation of these dispute resolution mechanisms. Colombia is relatively new to tax treaties and therefore also to MAP. We do not have a wide treaty network, but all our treaties have a MAP article, but we didn't have an internal proceeding, and there was no specific areas within the tax administration with functions related to MAP procedures. in this sense, the first MAP case was presented through another mechanism that was called a right of petition. The lack of regulation in our domestic law was an obstacle for both taxpayers and the tax administration. And in 2018 and 2019, through tax bills, a MAP provision was included in the Colombian tax code, containing the framework for the general commissioner or its delegate officer to carry on MAP procedures. and additional MAP guidance was afterwards issued in 2020. So from our experience, what we have noticed is that it's not only the issuance of regulation the most important, but it is also important to have a training in this matter for the tax administration officers, and also for not only for the International Taxation Office, but for also other officials in the tax administration, like customer services, legal division, auditors, and so on. And after these regulations were issued, the number of cases initiated has increased. In fact, we started with 0 cases. Our first case was presented in like 2014, but nowadays we have almost 10 cases in charge. So, and we have noticed a lot of interest now from taxpayers and advisors who want to understand how MAP works and are starting to understand that this is a real alternative for them. Yes.
Yes, thank you. And that is something we have seen in many countries, that with the introduction of MAP guidance, there is a lot more information there for taxpayers. And we see that taxpayers ask competent authorities a lot of questions with respect to MAP. Now, we do know that Colombia does not have unlimited resources, that there are challenges you face to have adequate resources in the competent authority function. And you're not alone. Many countries have that problem. However, you have staff members that are trained in MAP and that are also actively engaging in the MAP forum on these issues. So could you let us know a little bit how you manage your competent authority resources?
Yes, in fact, the International Taxation Office acts as a competent authority in our country and has a low number of officials, as you mentioned. It has been crucial for us to select persons that have some background and experience in international taxation and tax treaties, and we have tried to participate in all trainings, in-person training, virtual trainers, as well as technical assistance from the OECD. We participate in a program, in a Tax Inspectors Without Borders program related to MAP procedures. And we are trying to participate in other programs related to MAP procedures. Also, being to participate in discussions in the MAP forum gives us the opportunity to learn from the experiences of jurisdictions that have an important practical experience in MAP. So, as you mentioned, we are a small team and understand the importance of this task, and this kind of assistance is critical for the tax administration in Colombia. Today, our challenge for sure is to increase the number of officials in this international tax office and sign new DTAs and strengthen the team's capacity in order to guarantee procedures with the required quality and within the times and guidelines established in Action 14, and to comply with all the recommendations for the reviews processes.
Thank you. Now, last question for you. Colombia has a bilateral multilateral APA program, but it does not have a lot of experience in APAs. However, with MAP cases increasing, it may be important to start promoting APAs as an option to avoid a sharp increase in MAP inventory. And now you're also participating in other dispute prevention initiatives, such as ICAP. Now, can you tell us a little bit about your plans concerning APAs and dispute prevention in general?
The APA program is very important for Colombia as well. In fact, our first experience in dispute resolution mechanisms was in APAs. And although we have under our law this possibility for taxpayers from 2006, only until 2012, we started some meetings with taxpayers, and we started trying to implement a guideline, an APA guideline, with the support of international organisms, with the OECD, with the World Bank Group. And nowadays, we have introduced some changes into the tax administration's structure with the purpose of promoting these APA's programs. In 2021, the International Taxation Office was created, and the APA function was moved from the International Tax Audit Division to this new office, with the view of tackling some concerns expressed by taxpayers, as they did not feel comfortable negotiating APAs with auditors. And we thought that it was an important movement in order to guarantee to taxpayers that another office separate from the International Tax Audit Unit was in charge of the APA's programs. This change has been well received by taxpayers, and now we have received more cases, and more APAs are carried out by this new office. We have only signed in Colombia one APA, but we are advancing in their analysis, and we have had discussions with other jurisdictions regarding bilateral APAs. And we are also in the process of receiving training for the team and technical assistance regarding how to improve the internal procedures. And regarding our participation in the ICAP program, the plan is to be able to learn from the best international practices in terms of high-level risk assessments in transfer pricing, based on the analysis of the multinational groups with the presence of subsidiaries in our country, and to this extent begin to generate prevention mechanisms for Colombian taxpayers who become part of these ICAP programs. We think that dispute prevention is an important tool, and that it may alleviate the workload, but auditors have better results than long and expensive administrative and judicial processes.
Thank you, Andrea. So a lot of efforts in Colombia towards dispute prevention and dispute resolution. Now let's move up a little bit to the north. Nicole, if we look at the MAP statistics, and then we see that US has left the top 5 of MAP jurisdictions, and for once it's good to leave the top 5. And you have done that for a few years now, with your end inventory decreasing, whereas all the top 5 jurisdictions and most of the top 10 jurisdictions have an increasing inventory. So what do you think caused this positive evolution? And do you think it can be explained by all the efforts you have done with respect to dispute prevention?
Well, thank you, Sandra, and thank you for inviting me to participate today. I think there are several reasons for this positive evolution. First, of course, this wouldn't be possible without the dedication and tireless work of our advanced pricing and mutual agreement program, which handles both our attribution allocation MAP cases and, through the treaty assistance and interpretation team, the other MAP cases. So our philosophy is to strive for principled and practical resolutions in MAP. And I think this creates an environment where we can work constructively with treaty partners to solve cases not only one by one, but also consistently and efficiently across cases that share similar attributes. We also have had a deliberate focus on resolving our older MAP cases. But as your question acknowledges, MAP is really the endpoint of the tax certainty life cycle. At the IRS, we have implemented policies and devoted many resources to prevent disputes where possible. Our goal really is to achieve effective certainty for taxpayers and the IRS through the most efficient means possible. Most people know we've long had a robust APA program, and now we also participate actively in the multilateral ICAP risk assessment program. Under internal guidance we issued to staff earlier this year, we instruct them to engage with taxpayers with interest in the APA program to help determine which tools can most efficiently deliver certainty, practically speaking and broadly defined. In the previous panel, Jennifer Best, our Deputy Commissioner here in the Large Business and International Division, described the relevant considerations very well, so I won't repeat them here. But Of course, there will be some situations where taxpayers are subject to an IRS examination. Acknowledging that for several years, we have required our transfer pricing examination teams to consult with the ATMA program when considering a transfer pricing issue, and this is to increase their awareness of how an adjustment might be handled in MAP. This consultation, from our perspective, maintains the independence of both the examination and the competent authority functions, but it supplements the global awareness of our examiners, and then it has the added value of helping the MAP process be more efficient when adjustments are proposed.
Thank you. So it's prevention and resolution where there have been several efforts. Now, as we saw in the MAP statistics, MAP is not only about transfer pricing, and as I also invited people to go and look at the country-specific files, for the US, we see an important decrease in inventory for other cases. Now, most dispute prevention tools are on transfer pricing and not on these other cases. So what do you think triggered the decrease in the other cases?
Well, I'm glad you've taken a look at the other cases. They don't always get as much attention as the transfer pricing cases, but they are very important cases. Many of these other cases, as you alluded to before, involve individuals. And for many individuals, even a small amount of tax can be very meaningful to them. So in the United States, recognizing this importance, for a little more than a decade, we've had a whole team devoted to resolving other cases, and MAP is their primary responsibility. That's been an effective model for us to give these cases the attention that they deserve and to resolve them efficiently and in a principled manner. That being said, it's not all about dispute resolution, and we are very interested in exploring how we can adapt existing dispute resolution and prevention tools or create new ones to provide advanced certainty on non-transfer pricing treaty issues for both individuals and corporations. In September, the IRS requested comments on how we can expand tax certainty programs, specifically under Initiative 2.4 of our Strategic Operating Plan. Comments can be submitted until the end of March, and we'd be very interested in hearing comments in this area in particular. Of course, we also look forward to working with our treaty partners and within the MAP forum on these types of possibilities.
Thank you. And then one last thing we saw from the MAP statistics as a general trend is a small increase in cases closed without agreement. Now, when a treaty does not have arbitration, it is unfortunately a possible outcome when it seems impossible for competent authorities to come to an agreement. What is your experience with regard to this?
Again, part of this is something you alluded to earlier when you were discussing the MAP statistics. I do think that some of the trend is attributable to competent authorities focusing on the oldest cases in their inventories, and sometimes making what is a very difficult decision that the divide between the competent authorities is simply too great, and it's time to finally conclude the case, even if the outcome is an outcome that there's a agreement to disagree. Another factor that I've observed is that some MAP issues are either or, which makes it very difficult, even with creative thinking, to resolve the case. Here I'm thinking of disputes like, is there a permanent establishment or not? If the resident's jurisdiction firmly believes there is not a permanent establishment in the adjusting jurisdiction, it's very difficult to be able to reach an agreement sometimes. Another issue is whether the payments characterized as business profits not attributable to a permanent establishment and therefore taxable only in the resident state, or whether it's a royalty or another type of payment that could be taxed in the source state. And so sometimes it's just not possible to find an agreement. And yeah, that is a possible outcome absent something like a binding dispute resolution process like arbitration. Thankfully, at least from the perspective of the United States, this is a very uncommon outcome.
Yeah, thank you very much, Nicole. Now let's move to the Netherlands, to Europe. And there we have, like, since a few years now, the EU Dispute Resolution Directive. And Harmark, do you think that directive had an impact on cases initiated and closed, numbers and outcomes with respect to your EU treaty partners?
Well, hello, Sandra, first of all. Thank you also for participating. It's a bit difficult to measure this because the directive is only in place very shortly, so for a few years. And also it only applies to years 2018 and further, so we don't have so many cases coming in yet under the directive. I think there's a steady increase of the numbers of cases coming in, but as to, let's say, MAP under bilateral treaties, the number of cases coming in are comparatively still very low. And if they come under the directive, they don't come in under MAP under a bilateral treaty. So it's a trade-off between one or the other instrument. So the effect is not yet there, but I do say that once they come in under the directive, you see that there is more focus on the deadlines and compliance with those deadlines. So as those deadlines are sometimes very strict, there is a move towards having the cases earlier decided on to be accepted into the MAP process, or once they are in MAP, of course, the clock of 2 years starts ticking, and there's more pressure to come to a resolution quickly in MAP, and not to have arbitration. So there you see, I think, an effect that the case is closed. There is an effect on it. Case initiated, I don't see so much yet across all of Europe, I think, because the number of cases on the directive are not that high yet.
Thank you. Now, just like the US, the Netherlands is also one of the jurisdictions that participates in all the tax certainty tools. I mean, you have the horizontal monitoring, you do APAs, ICAP, you even participate in several joint audits, you have MAP and arbitration. So you offer a lot of possibilities to prevent disputes and get tax certainty in advance to the taxpayer. Do you think that your efforts with respect to prevention help you to keep away from the top 5 of MAP jurisdictions? And I would even say at the lower end of the top 10, because you're like number 9 with a big difference compared to some of your neighbor countries?
Well, to keep them away would be very helpful, I think, in general, but it's a bit of a yes and no. I think with all the tools, the certainty tools having in place, there's a lot of interaction going on with your treaty partners on multiple levels. So there's upfront discussion, there's cooperation upfront, and there's a joint effort to come to a certain agreement before a dispute kicks in, actually. So yes, you will see that that helps to avoid disputes coming into the MAP phase. So at some point, you would expect a lower number of MAP requests coming in and have more certainty tools. I think especially in the field of APAs, we see a trend that more and more APA requests are coming in instead of MAP requests. And I think in Japan, there was already a trend that they have more APAs than MAP. Well, we are not there yet, but I think there's an increase in the number of APA requests as compared to MAP requests for transfer pricing cases, also slightly moving towards each other. So there is you can see a direct effect, but I would say also it's not a direct effect in the terms that you see MAP cases coming in for transfer pricing cases. So also that number keeps growing, but I think it's keep growing less than it would have been if we did not have all the tools available in our tool bag. On the other hand, you talk about the top 5 and our top 10. Most of our MAP cases are, let's say, with our neighboring countries, Belgium and Germany. And as Nicole already said, there are about non-TP cases and mostly regard individuals. So all these tools are not applicable to them. So even though it has an effect on the TP and on the business taxation, I think there is not a tax certainty tool for individuals yet. So our top 10 remains the top 10 for that from that perspective. And we do see that those numbers sometimes continue to increase, but we also managed to solve them more quickly. Also, I think because of the relationships we're now building up with all our MAP partners, especially our neighboring partners.
Thank you. And then if we can quickly focus a little bit on MAP and APA, and especially the possibility of an APA to complement MAP, because taxpayers want to avoid recurring issues. And so one of the possibilities to do that is that if you have a dispute in MAP on an issue that will occur again, is to follow up the MAP with an APA. Now, is this something you encounter regularly? And if you do so, does the rollback of APAs is enough to cover the years between the MAP and the APA years?
Yes, absolutely. I think what we've said before is that we see an increase in APA requests coming in, but it works two ways. It's not only APA with a rollback we see more often, but we also see a MAP with an APA roll forward, so to say, so that we apply a MAP procedure to future years as well. So it depends a bit on the type of cases. If you have a dispute in MAP, which you have solved, then you can do an APA for future years as well. We see those combined requests coming in, but we also have cases where there's an APA. Of course, we roll back to several years in the past, and it's most of the time enough to cover the years in between. But it depends a bit on the countries, of course, how far they can go back in terms of years that they actually can cover all the period. But I think as compared to where we started with the MAP peer review in 2016 forward, that where we see that cases in rollback were not so frequent, I think there's an increase overall, but in the Netherlands, also, of course, we see them as well. And I think even more each year coming in on both sides. So MAP with rollback, of APA with rollback, and MAP with roll forward.
Thank you. So it shows that with a little bit of flexibility, we can deal in our way as well with recurring issues to avoid them happening all over again and again and again. Now, if we now move back southwards, Maida, hello, and Zambia is a country that is still new to MAP. You do not have a lot of MAP cases in your inventory, but still you have already taken a lot of actions in the past couple of years by putting together a competent authority function for MAP cases, publishing guidance, updating your profile to provide more information. Now, we have previously seen that other jurisdictions, like I said to to Andrea, that if you do that, taxpayers start to ask a lot of questions about MAP and will also start using MAP more. Could you tell us a little bit about the trends you see for MAP cases in Zambia?
Yes, hello, Sandra. Yes, and to put into context the MAP trends, allow me to start by mentioning that Zambia joined the implicit framework in 2017, but was only able to organize its competent authority resources in 2020, after which we issued guidance on the governance and administration of the initial agreement procedure in July 2022 through the practice note number 3 of 2022. But during the period where the review was undertaken, we had 4 MAP cases, and we managed to and that's between 2017 and 2022, and we managed to close 2 MAP cases in the same period. So we have about 2 cases that are still in the inventory. But what we have also seen aside that is that we have seen a lot of requests for information from taxpayers to just know more about the MAP, and to also just understand certain guidelines that we have put in our MAP practice note. So that's basically has been the trend concerning MAP cases.
Thank you. Now, Zambia was one of the first developing countries that went through the Action 14 simplified peer review that we started in the beginning of this year. And this one is specifically designed to help countries that have a limited MAP experience to prepare for more MAP cases. Now, speaking from the Secretariat perspective, Zambia's commitment to make sure MAP works well as a treaty obligation was very clear when we saw what you did. And like you explained, you started doing it before being reviewed. And so you were anticipating. And it's also evident that you have taken a lot of actions. Now, can you share a little bit about your experience with the peer review process for the other countries that will undergo the peer review and what you have taken back from it?
Yes, our peer review process was launched on 30th January 2023, and the questionnaire was sent to us and, of course, to also our peers, and we provided answers to the questionnaire on time. And this was because of the unwavering support we received from the OECD Secretariat, who were able to help us understand the questions and the kind of information that the questions in the questionnaire were intending to get. And we also received feedback. Two peers provided input, and one of these peers has had an experience in handling MAP cases with us, and through their comments, we were able to identify areas of concern regarding the availability of and the responsiveness of a competent authority, and consequently the areas of improvement. But again, throughout the process, the different versions of the draft reports were made available to us. To kind of review and validate our inputs so that we're on the same page with the Secretariat, and the Secretariat wanted to ensure that they are really reflecting what our experiences are, and we would also hold virtual meetings with the Secretariat to just allow us to clarify and confirm our understanding of our tax treaties, our domestic registrations, the MAP guidance, as well as our MAP inventory. And we have taken back from the peer review process a lot of things, and one of them is the expert analysis of our legal and administrative framework, which is relating to the mutual agreement procedure, and looking at it in conjunction or as governed by tax treaties, domestic legislation and regulations, as well as our MAP guidance. So we are able to stock take our implementation of Action 14 minimum standard, and appreciate the areas we needed to improve based on the recommendation of the final peer review report. And we think the Secretariat, and we thank the Secretariat actually that they were able to hold our hand throughout the process, especially that it was the first time that Zambia was being peer reviewed. So we really had a good interaction, and we learned a lot through the process on how to handle MAP cases and whatnot.
Thank you. And yes, Action 14 is all about improvement. So good to hear that with the help from the FTA MAP Forum, this is possible. Now, developing countries continue to face issues, of course, for arranging enough resources to handle MAP cases, apart from all the other tasks, because most of the competent authorities do not have like a dedicated MAP team. Now, Zambia does not have a big MAP function either, but you seem to have staff that are trained in MAP and that are working to improve the resources for MAP. Now, can you tell us about the challenges Zambia has faced in ensuring trained resources for MAP and how we are working to overcome them?
Indeed, Zambia does not yet have a big MAP function, and obviously because of limited resources. So the staff members in the competent authority function deal with several other responsibilities, such as the exchange of information, administration of double taxation treaties, and it's the way we can optimize the limited resources that we have, and with this challenge is not only unique to Zambia. I think it's and it's not specific to MAP, of course, but it cuts across all low capacity decision in a lot of other functions other than MAP. Yeah, but because our staff are also doing other things that may also require training in that field, you find that sometimes when the trainings are available for MAP, the staff are already committed with very urgent assignments, or they are already undertaking another training in a different field, and that will become very difficult to actually create enough time for MAP. But over and above, we have managed to overcome these challenges by just encouraging our staff to attend virtual trainings on resources such as KSP, as well as the MAP workshop whenever they are available, and this has really helped us to really have staff being up to date and able to manage this function.
Thank you very much, Maida. Now let's move to the east. Takahiro, Japan does not even appear in the top 20 of MAP statistics, with only a moderate number of transfer pricing cases initiated every year. And that's quite an accomplishment for a big economy. Now, taxpayers opt a lot more for APAs in Japan. We all know that. Can you tell us a bit about the numbers of APAs compared to the numbers of MAP cases you have in Japan, and whether you see any changes with respect to these numbers over the years?
Thank you. Thank you very much, Sandra, and thank you for giving this precious opportunity. I'm very happy to contribute to the panel. So, responding to your question, that first I would say that the name of our office is MAP office, but actually we handle the APA cases as well, and APA cases account for 80% of all cases. Then the question came from you is actually a very good timing question, because we have just published our annual MAP APA statistics domestically last week. So we have the latest numbers. Then so the numbers shown in the statistics are slightly different from the OECD MAP statistics, because we have used different terms and period long time before OECD developed MAP statistics under BEPS action plan project action plan 14. For example, our statistics include protective MAP cases, so it tends to be our statistics be inflated compared to OECD MAP cases. Anyway, I would to introduce the number of MAP requests in Japan. That would be around 50 per year, every year around 50 over the 10 years in a stable manner. So the MAP cases around 50 and very stable. And on the other hand, that the number of APA requests more fluctuate year by year, but tend to be around 200 cases over the past 10 years. So that means that the APA cases are 4 times of MAP cases overall. So MAP cases is a lower level of number, but APA cases are a lot of number. And yes, and then the number of APA requests shown a slight upward trend over the past 10 years. So it's fluctuate, but it's tend to be upward the trend. This is because partly because after the first APA requested by a taxpayer, then after the first APA ends, the taxpayers tend to wish to renew the APA after 5 years. So unless taxpayers stop to request renewal of APAs, so the trend is increasing in terms of APA requests. But I would say that the renewal of APA is much easier than tend to much more easier than the first APAs, because many cases that function and risk profile has not been changed so much. So this is some landscape of Japan is facing in terms of APA and MAPs. Thank you.
Thank you. And those numbers are quite impressive, I would say. Now, are there other initiative tools used in Japan to help avoid cases entering the MAP pipeline apart from the APAs?
Sorry. Yes, we have other initiatives and tools in Japan that helps cases from entering the MAP profile. In principle, we think the most important thing is for MNEs itself to themselves to control transfer pricing risk by themselves before the dispute arises. So in this regard, we developed some initiatives and tools to help taxpayers. First, I would say that we published a handbook to explain transfer pricing rules in more practical aspects. That handbooks include more detailed examples how taxpayers can prepare local file. Then the example includes the how the taxpayers can assess the function and risks and to analyze and create the local file. And in addition, our regional tax bureau set out the communication line to respond questions from taxpayers regarding transfer pricing. So the taxpayers can call that communication line and ask practical questions on specific control transactions to NTA staff in charge, including how to prepare local file. This is operated separately from pre-filing meetings. So this that's why the taxpayer can more frankly ask some questions on the specific transactions on transfer pricing to the tax authorities. Then secondly, we have a lecture event every year to provide instruction and advice on how taxpayers can prepare for the transfer pricing risk, as well as to provide updated information on MAP and APA around the world. So then the content of the lecture is published. So the taxpayers can be shared about that most latest information and background on the MAP and APA situation. And third, also this may be available in other jurisdictions as well. The NTA is open to all taxpayers to have a pre-filing consultation meeting. So we provide information and advice with several options to help taxpayers to elect the best option by themselves. And finally, this is actually not specific to transfer pricing, but related to broader tax compliance by large MNEs. Regional tax bureau have a program to discuss on the corporate governance with the senior management of MNEs and assess the level of governance based on the result of the audit. This is also important for transfer pricing aspects because dispute on transfer pricing sometimes arise due to lack of adequate corporate governance and the lack of less involvement of management on pricing policy. So this is also, I think, one of the helpful tools to make the taxpayers away from entering the MAP pipelines. Thank you.
Thank you very much. And I wanted to ask you, because it's the taxpayer in the end who decides whether to go for an APA or not. But in fact, your answering of the last question already shows what you're all doing to convince the taxpayer to go for the APA. So thank you very much for that. And so we've heard now from several countries how it is specifically for them with respect to dispute prevention and dispute resolution. We will now listen to a small video from Michael Leonard from the UN, who has also worked on tax certainty at UN level. And so I'll just let the colleague start the video.
Thank you for the invitation to Tax Certainty Day. I wish I could have been here live, but I'll try to join later in the day. To me, it was important to accept an invitation, even if I could only participate by video, for two main reasons. The first of all is that tax certainty, improving tax certainty, is a common interest for developing and developed countries. And not just that, but also there are different aspects of it which are very important to all stakeholders in tax systems. It's important to have greater certainty for taxpayers. It's also important for governments to have certainty that what they've agreed will, in practice, be applied at the practical level, that the understandings they've reached will be reflected in the operation of a tax treaty in practice. I think it's also important for the intended beneficiaries of tax systems that the tax system will operate as intended by the agreement. It's also important to me to speak on this topic for another reason, because at the moment I'm often being asked how the UN Tax Secretariat works with the OECD Tax Secretariat. And the answer is we work together a lot, and we work together in a very collegial spirit very effectively. And I think we learn from each other. This is a good example of that. The UN Tax Certainty work, or as we call it, the avoidance and resolution of tax disputes, was largely done by a very diverse subcommittee. It included Sandra and Sriram from the OECD, as well as representatives of other international and regional organisations, countries, business and academia, working together very productively, each with their own perspective, which we could then mould together for, I think, a very helpful practical guidance. That guidance is available on our website in English, French and Spanish. It's called the United Nations Handbook on the Avoidance and Resolution of Tax Disputes. So if you type in your search engine, United Nations Handbook on the Avoidance and Resolution of Tax Disputes, you'll find PDF copies in those languages freely downloadable. Part 1 of that handbook looks at measures to avoid and resolve tax disputes, including ways to avoid unnecessary disputes arising. It looks at domestic dispute resolution provisions and some of the issues that arise there. It also includes possibilities not just within the tax administration, but also the treatment of adjudication in courts. Again, some of the issues that might arise in either case. And depending on the country, it also addresses issues such as mediation or arbitration, which are increasingly getting some focus in this area. The issue of mediation was something which at times there was a bit of resistance because it was felt that this might detract from the focus on possibility of arbitration in tax treaties. But I think there's an increasing understanding that giving countries the chance to explore the benefits of third-party participation and third-party advice in these areas in a non-binding way might actually encourage them that this is useful. This shows that they're acting independently. They've got a third party who's giving them advice, and takes a bit of the pressure off some of the civil servants in deciding some of these big cases. And it also means you get some advice, for example, that you might think this might be a beneficial interpretation in this case, but in the long run, it's not actually an approach which you should be taking. So that's something which countries have to think about, but I think increasingly countries are thinking, even if I'm not ready for arbitration, maybe we should think about mediation as a step in the process. Sometimes it's even a step before arbitration. Part 2 of the handbook looks more specifically at the mutual agreement procedure in tax treaties, including what it is and its legal basis, such as transfer pricing and attribution of profits to a PE, and how it actually operates in practice, the steps are involved, the approach that should be taken, and so forth, in accordance with the obligations under the treaty and best practices. Again, it addresses the arbitration option, like the UN model, which addresses that as a possibility if countries want it. It includes a consideration of the perceived pros and cons of the process, not taking a view either way, but letting countries think about what might be the best thing in their situation. Also looks at possible improvements to the map, including a non-binding mediation option, such as I've mentioned, the use of technology, and of course the importance of and the benefits of capacity building. In fact, this guide has formed the basis for UN capacity building, some of it conducted with the OECD and also with other partners, regional and international organisations. There's other aspects in this area like advanced pricing arrangements, which are being discussed in this meeting and which are potentially important to consider. whether it might be an efficient way of using your resources so you can focus on other those transfer pricing experts, for example, on the more difficult cases. But that involves an analysis in your situation of how your resources are best used. So there's more to do in this area. We still have a group which is looking at this issue, but at the moment, there's no need to update the handbook, which is still quite fresh. We're also looking at some of the issues which might further arise in transfer pricing, dispute avoidance and resolution. As I've mentioned, are very important, often very big cases. And there'll be some further work on that in the context of the UN guidance on transfer pricing. So we look forward to giving better guidance on that, learning from developing countries in capacity building and responding to that and giving you more of what you think adds value in our guidance work. And we also look to it being useful to developed countries as well and to other stakeholders, including business. Working with OECD colleagues is an important part of this plan, and we look forward to that, and we look forward to working with more and more of you in ensuring that where we can, legitimately, we can avoid a dispute, and where we can't avoid a dispute, we can resolve it in a way that is in accordance with what has been agreed between countries and gives some sort of predictability and consistency to all stakeholders in tax systems. Thank you very much, and I hope you enjoy the rest of the day. I hope I will be able to join you a little bit later. Thank you very much.
Thank you. So we see that we're all on the same level there. Now, Gianmarco and Martin, we've heard how jurisdictions see themselves in the tax certainty space. We've heard from Michael about what efforts they are doing. Does what you encounter in practice confirms this? Do you have other experiences? So perhaps, Gianmarco, I see that you already unmuted yourself. So can you start?
Absolutely. So first of all, good afternoon, and thanks again for the invite. I would say yes. Maybe I think there has been a significant improvement on the work and the functioning of dispute resolution and dispute prevention measures, and I think especially the work since the BEPS, the first batch of the BEPS action plan was delivered around Action 14 show that. However, I still think that we are living, although I would say tax certainty and dispute prevention has been, let's say, the holy grail, we are still living in a world of dispute resolution rather than dispute prevention. And I think that there are some aspects where further improvement is needed. So maybe if I may start by the end, I would say certainly thanks to the work of the OECD and also other international and regional organizations, you are on the right track, but there might be some improvements that needs to be performed. So let me a little bit show and share a little bit of my personal practical experience in the last few years. I would say that around the world, sometimes to my surprise, some countries, so also the one that have, I would say, more structured dispute resolution teams or competent authority teams, because of their legislative system, they sometimes tend to deny access to MAP. So I think we need to not to forget that the goal here to rely on dispute resolution measures, dispute prevention, is to avoid double taxation. But sometimes, unfortunately, for some legislative choices, there is not an opportunity, unavoidable, to enter or to end up only in double taxation. So at times you might find yourself in a situation where, as a taxpayer, you need to face a trade-off between entering into a domestic measure for a settlement, and if you accept entering into this settlement or to rely on a specific domestic measure, sometimes access to mutual agreement procedure, either expressly or more tacitly, is prevented. So at times, I don't want to make name of countries, but there have been situations where, when you are in the context of a settlement, the examination team said, well, this is what we offer as a result to try to close the controversy, but if you want to achieve such a result, you don't need to activate a mutual agreement procedure. And this is, I think, kind of unfortunate looking specifically at the great amount of work that at the OECD level, the recommendation of Action 14 have been giving. By the same token, I found myself in certain instances where some countries, they tend, let's say, for instance, in the field of transfer pricing, to deny deductions for certain tax expenses that arguably would fall into the scope of application of Article 9, so within the realm of transfer pricing rules, but they try to invoke instead the application of other domestic measures within a tax code simply to deny the possibility of entering into a mutual agreement procedure. And so I think that this sometimes goes also into the way in which tax authorities are structured. So in my experience, I think that those units within a tax authority that deal with dispute resolution of international tax cases, so competent authorities are technically very strong, but they function very well when they are very independent in their way of operation and solving cases to examination teams. So stated otherwise, if you have an examination teams that is hierarchically stronger than a competent authority team, so that the competent authority team cannot depart from the findings of the examination teams, this is where some friction might arise, and therefore sometimes the independence and the possibility to resolve double taxation cases is prevented. So I would say that it's very important that tax authorities, when they structure strongly a competent authority function, and I heard earlier on Andrea, for instance, from Colombia, that mentioned that there is a need for training. It's also very important that there is a full element of independence on the way in which competent authorities dealing with double taxation cases operate. So I would say that if I look also at the latest work that has been done both with Pillar 1 and Pillar 2, I think the goal is rightly the one of simplifying. But if I move that into the word dispute resolution, sometimes I think that the units, the competent authority teams that have to solve cases, sometimes they have a very daunting task of dealing with cases that last for years. So I remember myself when I was in the tax authority that you might have a competent authority meeting that lasts 3 days. And in these 3 days, you have to deal with 20 or 30 cases, some that are very important, others that are very immaterial, but still accumulate into the backlog of tax authorities. So I think try to organize and arrange a way in which this case should be managed. So very, very important. Another important goal is to try to simplify the way in which competent authorities must solve certain cases. So I think the experience of, the current developments around Amount B and try to find some sort of, baseline activities to solve cases is very, very important. And I think that there are instances where sometimes competent authorities could also rely on, let's say, memorandum of understanding for, I would say, common fact pattern that they encounter in the transfer pricing realm against, let's say, I don't know, intragroup services or contract manufacturing activities that would also facilitate and accelerate the resolution of cases. So I would certainly encourage the good work that you're doing into the focus on simplification, but also try to make sure that when the work on the use of MAP is done, countries do not have to interpose into a proper functioning of a dispute resolution mechanism the application of domestic measures within their tax code that could prevent a proper functioning of MAP measures, because unfortunately this is still something that can occur. Having said that, I would like to really congratulate you for the work that you are doing, and hopefully keep going on the right track as you are displaying in this last couple of years. So thank you very much.
Thank you, Gianmarco. Now, Martin, does this correspond with your experiences? And you have seen both sides because you have been competent authority before. So really interested in your point of view here.
Hi, Sandra, and thank you for the opportunity to speak on this panel. A lot of what Gianmarco talks about, you see some evidence of. I think it's important to remember that MAP and APA, when they work, they're terrific tools. That APA is the gold standard of tax certainty, and MAP, following a tax audit, is really about the only way that you can guarantee eliminating all the double taxation on both sides. So, just briefly, I'd like to recognise all the hard work that's done at the Inclusive Framework by the delegates, by the Secretariat, and as you mentioned yourself, producing the BAPAM and MOMA, which I think are going to be great. And I really would like to see competent authorities start to actively use it when they're talking to the businesses and sort of cite it and say, this is what good likes, this is how we're going to do it. If we don't use it, we might lose it, sort of thing. So I encourage that. I also, just very briefly, I was struck by the certainty stuff in Amount A. There were some really interesting things in there. I know Amount A has some hurdles to overcome, but I just thought to myself, wouldn't it be wonderful if we were in a world where when you applied for an APA and you got admitted, you knew you had a guaranteed outcome at the end? It will be interesting next year to see the APA statistics, to see, it's a lot of time and effort for everybody, and it can take 2 or 3 years, and then the competent authorities sometimes, not often, but sometimes they just go, can't help, and it's a shame that's a possibility. So maybe there's something to be done around that. I just wanted to pick up on 2 sort of things. One was a little bit of an emerging theme of competent authorities drawing lines in the sand when it comes to MAP, particularly if there's no arbitration in the treaties, and not showing that principle but pragmatic approach that's needed. Just occasionally you get this sense that they're almost re-auditing cases when in fact their job, as I was always taught, was to defend the treaty and to attack to address the action, not, but once the actions happen, that's what the focus should be on. Is it justified, is it principled, is it evidence-based, or is it not? And so that's, I see a little trend in that, but it's not significant yet, but I think it's there. And then the other thing I wanted to just mention briefly was around the timelines. Everybody strives to do the timelines better, and we don't have an infinite pool from which to draw resources from. So it's a question of trying to work smarter. And I'm struck sometimes by the fact, and this was picking up to some extent on Gianmarco's, one of his points, the timing of a lot of MAP cases and APA cases is shackled to the face-to-face meeting schedule. So if you have a reasonably big authority with lots of cases, they have a meeting with their opposite treaty partner once a year. And there's still quite a lot of reluctance, despite the experience of COVID, still quite a lot of reluctance to unshackle some of these cases, which could be done, because we so often see a case goes in, the request goes in, it gets admitted at the first meeting, which could be 4 or 5 or 6 months away. It's a general update. And then one of them says they'll do a position paper. And then nothing happens till 2 months before the next face-to-face, when everybody rushes to get the position paper out in time, and then it's discussed. Then the other one says, "Oh, I'll do it," and it just, there's an institutional delay baked in there. And my plea would be for competent authorities to look out for those cases. That it's not saying deal with them by correspondence, but deal with them on the phone. Don't wait for a year to the next meeting. But other than that, I think the job that the competent authorities do is terrific. I think they're working really hard. And I commend all the efforts that have been made by the inclusive framework, by the Secretariat, and by other parties, and by the competent authorities, and by businesses to make this a bit better. Thank you.
Thank you very much, Martin. And with this, we come to the end of our session. I think a lot is being done with respect to prevention and resolution. There's still a lot that can be done. We can still improve. We heard from Ellen at the beginning of this day that we can do so in collaboration between the countries, the competent authorities, and business. And so please stay focused, because we may have some initiatives coming up where we will work together and see where we will ask and listen to you to see where we can improve, how we can improve, what we can do. And with that, I now give it back to Achim.
Thank you, Sandra. Thank you for taking us through this. It was a mammoth task of keeping to the time somewhat, and sorry, Bob, that we're running a couple of minutes late. I've already promised I will eliminate my concluding remarks, so we have the time also move to the next session. I think it's good for all of those delegates, Gianmarco, Martin, and the others, to keep us honest, to sort of see that we're doing well and also keep us improving so we can do this together, not when we meet on Tax Certainty Day, but every day of your reality and audit and other things. That's where it really matters. It's good that we come together, but it's just a day. And of course, more is necessary every day as we do this. Thank you also. I've seen that Michael has now actually joined. So you've seen him in a video, you've seen him live. It's also in some sense, you're not going to get on the board, Michael, today, but in some sense, it's your lifetime achievement also. I think it's probably your last Tax Certainty Day. I think you will be retiring, but it's good to have you had both of those capacities. Thanks for all the work, I think, that we're doing on a topic that tremendously matters of how making sure that we do get to better tax certainty, that the capacity is there. I think that really is, as I guess you also said in the video, something where we're all coming together, businesses, tax administrations, to see how we can do better there. And that's, I think, the cue to hand over to you, Bob. Everybody knows Bob Hamilton. He is the chair of the FTA, the Commissioner Canada Revenue Agency, who will be handling the award ceremony, where I think we are coming together to see there's a lot of work that competent authorities has done to make that possible. In challenging circumstances, cases rise also because MAP is successful in many of those things that we have been discussing over the day, but it's also time to take stock for some of the achievements that we have made. And with that, it is my pleasure, Bob, to hand it over to you.
Thank you, Kim, and thank you everyone for inviting me here today. It's always a pleasure to hand out the Mutual Agreement Procedures Awards. I've done it for a few years running, and it's always such a happy event. I love to be on this side, and I guess as a tax administrator, I'm intuitively drawn to anything that has a happy result. So I certainly get a healthy mix of unhappy events as well in the tax administration world. So this is very much an honor for me. And I do believe it's a very important cause. I participated a couple of weeks ago in a session in Washington, the U.S. Council for International Business, a day focused on tax certainty, and moderated a panel there. And it really is an important discussion that brings together tax administrators, businesses, and hopefully in a spirit of cooperation. We have lots of things going on the international scene in terms of the pillars, and I've heard mention of the BEPS. But I think through it all, we have to keep an eye on tax certainty, where I think that we can actually save all of ourselves a lot of time and effort and get to more acceptable results in a faster, more efficient way. Pushing on the dual levers of tax dispute avoidance, which I'm a fan of, but also recognizing that we need to be able to solve disputes in an efficient manner. So both resolution and avoidance are important. And today we're here to celebrate some of the great work that's gone on. And I think through some of the discussion that I've picked up on, while there remain to be challenges, and as Kim said, it's probably going to continue to be challenging, it is a great chance to reward the fact that a lot of countries are working very hard to improve tax certainty. And it's a great opportunity today to celebrate where we've made some strides in efficient and effective, timely resolution. So with that in mind, let me get right to the event and talk a little bit about the awards we're going to give out today. They're going to be in 5 categories, which relate to different aspects. And you can see the slides, or I hope everybody can see the slides that are rolling as I speak. And speed is one of the first ones that we talk about, and it rewards the jurisdiction that needed the least time on average to close its cases. And speed and timeliness are very important factors for all of us. The second category is the age of the inventory, which would go to the jurisdiction with the smallest percentages of pre-2016 cases in its inventory. The third category is caseload management, which is given to the jurisdiction that best managed its total caseload, which is the number of cases in its starting inventory plus the cases starting during 2022. Cooperation is a category that rewards the jurisdictions that worked well together, and I think that's one of the keys to this, is working well together as tax administrators and with the business community. And finally, the fifth category is for improvement, and the jurisdiction that showed the most improvement in resolving MAP cases with positive outcomes. So let's go to the first category of speed. And there's an award for the best average time for transfer pricing and an award for other cases. And the winners are, for the best average time in transfer pricing, the Netherlands. And for the best average time in other cases, New Zealand. And I'm asked here to remind you that we can all applaud through the applaud button or congratulate the winners through the chat time. So let's see how we came to that result. For transfer pricing cases, we looked at jurisdictions that closed at least 50 cases, and we see that 3 jurisdictions closed their cases on average in less than 24 months. Took the Netherlands 19.62 months, Switzerland 21.34 months, and Denmark rounds out the top 3 jurisdictions with an average closing time of 22.03 months. For other cases beyond transfer pricing, we looked at jurisdictions that closed at least 20 cases. And the top 3 consists of New Zealand at 6.4 months, Ireland at 7.6 months, and Portugal at 11.5 months. So Netherlands, congratulations for this achievement on the transfer pricing cases, and I'll open the floor to give you a few minutes to talk about how you've achieved this impressive result.
Yeah. Thank you, Chair. The Netherlands is very pleased and honored to receive this award. As some of you will probably know, in 2022, the MAP function in the Netherlands was transferred from the ministry to the tax administration. And in 2022, the Netherlands did invest in additional resources by building a team within the tax administration that is fully dedicated to MAP and treatment of bilateral APAs and multilateral APAs. And we are especially pleased to win this award since 2022 was our starting year, where we were still building up the team. And it certainly will motivate the entire team to do even better in the future. But we are very much aware that we have not done this alone by ourselves. Disputes can only be resolved if all treaty partners involved are willing to cooperate. Therefore, we owe a big thank you to all treaty partners for the great cooperation, and special thanks to our largest treaty partners, with whom we were able to organize high-level meetings in which we did not discuss individual cases, but focused on the organizational of the MAP's functions and the factors that contribute to success and caseload management. Because our treaty partners have enabled us to learn from them, we celebrate this today. We hope that this also inspires other countries to invest in the MAP function so we can jointly improve tax certainty. Thank you.
Thank you very much for that, Niels. And again, congratulations to the Netherlands for that achievement. Let's go to New Zealand and its award for the other cases. And I note that last year you won the medium-sized inventory caseload management award. And congratulations on winning this award this year. And let me ask you, what were some of the reasons that you succeeded this year?
Oh, thanks, Bob, and good morning from New Zealand. I think, firstly, just a very hard-working team, and we do give priority to MAP cases here in New Zealand as part of our competent authority function. So obviously things are working well in that regard, but like the Netherlands, just like to thank our partners, especially our key ones, Australia and the UK, for all their excellent cooperation in turning around the cases so quickly. So special thanks to them.
Thank you. Thank you for that. And again, congratulations to New Zealand and also to Netherlands for taking the speed category this year. Let's now go to the age of inventory. And this award, just a reminder, goes to the jurisdiction with the smallest percentage of pre-2016 cases in its ending inventory. And again, I think there was a reference in the previous session to how long some things around, and I know in a Canadian context, we're all trying to be timely. So I think taking account of the aged inventory is important. Jurisdictions with more than 100 cases in inventory were taken into consideration, and the winner is, for the best stage of inventory, Canada. Well, I'm very, very proud of that. And let's take a look at the results once again. In the top 5, we start with around 3% of old cases left in inventory. Number 3 is Switzerland with around 2.1%. Number 2 is the Netherlands, and Canada now has around 1% of old cases in its inventory. Well done, Canada. And certainly, I believe this is an important result, something that I certainly try to push on a lot of fronts within our agency. And this is the second year running that Canada has won this award. And have you taken specific efforts to close more of your old cases?
Thank you, Commissioner Hamilton. I hope you hear me. Yes. So yeah, on behalf of Canada, I'd like to thank the Secretariat and for this recognition and everyone working behind the scenes. We are very honored to receive this this award. Briefly, we would point to 3 main factors: our skilled workforce, our enhanced procedures for handling MAP cases. We have a dedicated team in Canada, fortunately, that handles MAP cases. And I would point to also benefits from many treaties that have arbitration provisions. Helps to focus the discussions in a more principled manner, which tends to improve timely resolution. We have obviously achieved this through teamwork with all our treaty partners, so this would not have been possible without the dedicated work of all our treaty partners, and we would like to extend special thanks to everyone for their close collaboration. Thank you.
Thank you very much, Patrick, and congratulations to you and the team. Let's go to the third category, which is caseload management. And you see the big stack of to-dos there. And this award is given to the jurisdiction that best managed its total caseload and compute that by determined by comparing the number of cases closed with the number of cases that it has to deal with. There's an award for the large MAP jurisdictions with more than 100 cases left in their inventory, and one for the jurisdictions with a moderate inventory between 20 and 100 cases. So the winners are, for the large size inventory, Luxembourg, and for the medium-sized inventory, Norway. Now let's look at the results again. Just to go over it, the ratio we're looking at is designed to compare the cases closed in 2022 with the total caseload during that year, which is composed of the starting inventory plus the new cases that come in during the year. For the jurisdictions with a large inventory, we see that third is Ireland with 52%, second is Denmark with 53%, and first place is Luxembourg with 57%. And then if we look at the medium-sized inventory category, Australia is third with 51%, Singapore second, again with 51%, and Norway is first at 54%. So let's go to Luxembourg. Again, congratulations. And what would you like to say to share with us how you achieved this impressive result?
Thank you, Commissioner. Thank you to the OECD Secretariat for this award. How did we achieve this? Well, I think it's based on several factors. One of the most important is the staff. We have quite experienced staff that is working for years and years on maps, and so we managed to have some experience and to work very efficient. Nevertheless, we have also to cooperate with our competent authorities, and yes, without the cooperation and good working meetings we had with our major treaty partners for maps, we also thank these treaty partners for the good cooperation. And last but not least, I think it's also important that taxpayers participate actively and give prompt replies to complementary information that might be requested by the competent authorities. Thank you.
Thank you, Michelle, and congratulations to Luxembourg. Let's now turn to Norway. And what was your key to success?
Thank you, Mr. Hamilton. This was really a surprise to us. It was really bringing some sun to a winter cold Norway. I think that due to the increased focus or international focus on MAP, MAP continues to be a major priority to us. And due to the close dialogue with taxpayers and to our treaty partners, we managed to close a fair amount of MAP cases during 2022. So we would really like to thank our treaty partners for making this award possible. And we very much look forward to continuing our strong cooperation and to continuing our joint effort to solve even more MAP cases in the future. Thank you.
Thank you very much. And again, congratulations to Luxembourg and Norway. Let's move to the next category, which is cooperation. And we've heard the word team and cooperation a few times today already. But this category recognizes the jurisdictions that work particularly well together and that reach the most number of agreements as compared to their total caseload, using the number of cases in its start inventory and the cases started during 2022. Whether it's within your own team or with other jurisdictions, MAP is something that you have to do in a team respect and to work with others. And as they say, you need two hands to clap. So here we have an award for the jurisdictions that manage their joint caseload well. And the winners are, for the best cooperation in transfer pricing cases, Denmark and Ireland, and for the best cooperation in other cases, Germany and Ireland. This is the second year running that Ireland has won this award for other cases. And it's really an impressive achievement. So congratulations to Denmark and Ireland and Germany and Ireland. Let's look at the results a little more closely. Here, an agreement score was designed to compare the cases fully resolved in 2022 by a pair's jurisdictions as compared to their MAP caseload. I need to clarify that only jurisdictions that had more than 20 joint cases were taken into consideration, and that this only relates to the cases received after January 2016, as we don't have data to go back farther than that. For transfer pricing cases, Netherlands and Spain managed to close a substantial portion of their caseload with agreement coming in at a score of 53. Italy and Spain did a little better at around 54, but Denmark and Ireland are the best pair. They managed to close 83, and a truly impressive achievement. For the other cases category, Netherlands and the UK did well with this agreement score of 33. Ireland and the UK had an agreement score of 65, which is great. However, Germany and Ireland closed almost all joint cases with an agreement score of 135. So those are pretty impressive figures all the way around. And so to Denmark and Ireland first in the transfer pricing case, congratulations. And Denmark, having featured strongly in the time to close transfer pricing cases category, could you tell us how you did it and what contributed to the good cooperation you had with Ireland?
I'll try. Thank you very much. Thank you very much to the Secretariat for putting these statistics together. Did you hear the bang? That was the champagne. It would, of course, have been great to have this Tax Certainty Day as a face-to-face meeting, a kind of tax conference. I think that could also help in talking together about how we manage the cases. Of course, a special thanks to Ireland for this cooperation. I think it also shows a long-lasting relationship with Ireland, that we are able to close the cases. And the market still something to do, but let's close the rest of them also. And of course, besides good cooperation with the Irish, I also have to thank, of course, my team, my employees, and also the companies and advisors that are being helpful in achieving this award. Also, just something I would like to say here, because it's always positive, but what I experience from a Danish side is that we have many countries with only 1 or 2 cases where we do not hear much, and we try to get them on board. So if there are any CA listening into this that have a case with Denmark, please reach out. We can have a video meeting as soon as possible. And also at the end, I would like to say it's only unfortunate that when we look on the ratio of closed cases, that we have to be together with our legal team, because without that, our ratio would have been more than 70. So that would certainly be an award. But again, thank you very much. And thank you very much to Margaret and her team.
Thank you. Thank you for that. I'll turn to Ireland. Is there anything you'd like to add?
Yes, thank you, Commissioner, and thank you, Bo. I'm absolutely honoured to accept this award on behalf of the Irish Competent Authority team. Having a strong and positive working relationship with all of our treaty partners is extremely important to us, and we're delighted to have won this award. And of course, I'd like to especially thank Bo and the rest of the Danish team for their cooperation in resolving the MAP cases and achieving this award. I suppose from our perspective, the main factors that helped us achieve the award, as Bo said, it's the well-established working relationship that we have with Denmark that's been built up over many years. It's also ensuring the case teams are well resourced and focused on resolving the MAP cases in an efficient, effective and timely manner, using a hybrid approach of face-to-face and virtual meetings so that we can continue to progress the cases in between the face-to-face meetings, and importantly, having a pragmatic approach to resolving the MAP cases so that any challenges that did arise were addressed in a practical and sensible way. So we look forward to continuing to work with Bo and his team in Denmark, and of course all of our treaty partners, in a collaborative and cooperative way, and with a view to resolving our MAP cases in a timely, efficient and effective manner, and of course providing certainty to the taxpayers. So thank you again.
Okay, well, thank you. Thank you, and don't go far, because while I congratulate Denmark and Ireland, I'm also going to congratulate Ireland again with Germany, who took the other prize for this category. Germany, congratulations, and your closing score with Ireland on other cases looks impressive for the 2nd year running. How did you manage this?
Thank you very much, Commissioner. Yes, we have a lot of cases, other cases with a lot of country, being a country with a lot of borders, but we had for the last couple of years quite a lot of cases coming in with Ireland, and I'm proud to say that we found a way how to deal with those cases through close cooperation, and my thanks go out to my colleagues, my tax analysts who've been working these cases, but especially also the Irish Competent Authority team, Patrick Clark and his colleagues, who've done a tremendous job and really worked hard to close all these cases. And we try to continue the good work with all our treaty partners, of course, because the other cases are really at the core of my heart. I think those are often concerning employees, pensioners, and other individuals. And I think it's really important that we sort out the problems they have arising from double taxation. So thank you very much, and I hope that we continue the good work with our treaty partners throughout the next year as well.
Thank you for that. And let me turn to Ireland, who's had such a great day. And you're obviously doing something right. What advice would you give to others in this space?
Thank you, Commissioner, and thank you to the OECD for this award, which I'm delighted to accept on behalf of Ireland and the Irish Competent Authority team. Achieving tax certainty to eliminate double taxation and international tax disputes on these cross-border tax matters is, I think, as we've seen today more than ever, critical to taxpayers. To achieve this, and as taxpayers pursue the MAP process more frequently to resolve these issues, We believe that a strong collaborative and cooperative relationship between competent authorities is really important. The Irish Competent Authority team works hard with our treaty partners to resolve the MAP disputes. And the key to Ireland achieving this award today has been the solid collaborative working relationship we've developed and fostered with our German friends. And I'd like to take the opportunity to thank Germany most sincerely for all your efforts in this regard in resolving our MAP cases in such a pragmatic and timely manner. We believe that frequent communication, both written and orally in all channels, along with a strong focus on productivity, progression and resolution of cases were important factors in sustaining that working relationship and the willingness to do so in such an efficient manner. And we look forward to continuing this approach with Germany and indeed all of our treaty partners over the coming months and years. So thank you all very much.
Thank you. Truly an impressive performance. So let's go to the fifth and the final category, which is most improved. And for this category, obviously it recognized the most improved jurisdiction, and it goes to the jurisdiction that showed the highest increase in the number of cases resolved with full agreement or unilateral relief in 2022 compared to the previous year. And the winner is the Netherlands. And congratulations to the Netherlands. So let's understand the results a little bit better. The Netherlands showed the most improvement with 102 more cases resolved as compared to 2021. This includes an improvement of 31 for transfer pricing and an improvement of 71 for other cases. So Netherlands, congratulations. It's always great to see areas where we improve. Could you share with us what contributed to this improvement over the last year? I'm not hearing the Netherlands.
Sorry, I think
there we
that,
go.
okay, it's back again. And I can echo the words I have said before. We did not do this on our own. So thanks again to our treaty partners who worked along with us to achieve the results. So thank you all.
Great, thank you for that. And congratulations again. So that brings us to the end of the MAP Awards. Just a couple of final thoughts for me, and I'll turn it back over to Kim. What we heard a lot in people talking about how they accomplished these great things was collective efforts and the teams, strong teams that work within the jurisdiction, that are focused, determined for good results, and that work well together with counterparts in other jurisdictions. So I think that aspect of collaboration, cooperation, and a focus to try to improve tax certainty has really been underlying everything that we've talked about. So congratulations to those who won the awards today, but congratulations to all of us, because I think I see more effort, more determination, and a greater will to try to provide tax certainty where we can. And I know it's hard work and it's not always easy, but thank you all for contributing to it. And I look forward to hopefully having another batch of winners in the next year. So thank you for your attention. And back over to you, I assume, Kim.
Thanks a lot, Bob. Thanks a lot for taking us through this, delivering on time, bringing it even back on track here. I think we've packed in a lot in this day. And so I'll be brief. And in terms of being brief, I hand it over to Alan, who's already looking at his watch, but he does sort of close it first. And then I get the absolute last word, but it will only be 2 words. So over to you, Alan, to take us to the end of the day.
Well, thank you very much, Akim, and just to reassure everybody on the call that there's the tyranny of the smartwatch. It buzzes every now and then, and it's almost impossible to ignore it. So it wasn't that I was actually checking on the time for any other reason. So first of all, thank you and congratulations. I think the main theme of what I want to say is congratulations. Congratulations on a really successful meeting in the first place. It's been lively, lots of discussion, and I think lots of great engagement, and I think also lots of ideas for future improvement, which I think is really important. Congratulations, maybe more fundamentally, on the great progress that's been made since the last time we were together. The statistics tell the tale themselves. Of course, a slight increase, as we said earlier. But just the fact that improvement and the progress that we've seen is across the entire spectrum of countries, of ages, of disputes, and so on and so forth. So really great to see that the enormous effort that I know that everyone has put in has really paid off. And then, of course, finally, congratulations to the MAP Award winners. They really, truly deserve those. I'd just also like to thank the FTA and the Secretariat for the much broader participation of business in this year's Tax Certainty Day, our representation on the panels. We heard from many of the MAP Award winners just how important the cooperation and close working arrangements with business have been to their own success. So it's great that not only have we helped to move those statistics forward from the business perspective, but also we've been able to share some of our ideas and some of our experiences that hopefully can help to improve that as we go forward. Tax certainty remains as important for business as it always has. There are, as we've heard, a number of headwinds, an enormous amount of innovation, both at the business level, but also at the policy level. So the fact that we continue to make progress, I think, is a credit to everybody who's been involved. And just reminds us of the importance of using all of the tools that we have available to us. So good policy in the first place, of course, is the foundation of tax certainty for everybody. But also that big focus, which I know we all have on the front end, the dispute prevention mechanisms. We have so many tools available to us, and I really hope that we continue to embrace and use all of those as much as possible where they're most important. So with that, I look forward to another year of progress, another year of positive progress, and to the results of that in a year's time, and maybe as the Danish delegate has already said, maybe next year we'll actually come together face to face to celebrate these things in the more traditional style. Thank you to everyone.
Thank you, Alan. That only leaves it to me in the remaining 3 minutes to take us to the end here. So one, I think, looking at the cases, Bob, here, and looking at Canada and the inventory, so maybe I will challenge you so that you win again next year, and then you're at 1% and we're getting it down to 0. So let's see when we have to come up with a new category, because we've finished that one, and I'm sure we can. I think it certainly would merit, I think, to see also whether we can have a tax certainty in person again. We need to see also, it may be that the tax certainty and the release coincides with the next plenary meeting. So we need to think about whether we are able to bring some of this together so that the colleagues can also celebrate the achievements more in person. So certainly something that I think we can take away and reflect. I think it's a very rich day to go through, I guess, as you were saying, Alan, the many different dimensions that make up this agenda, right? Ideally starting from concepts such as Amount B and other simplifications in the rules themselves, and taking us through the different ideas. I certainly take away many of these very tangible stories in the ICAP session of what we can do in the risk assessment space. And I think that's quite important, that this works, we've seen it. There's some myths out there that hopefully we've been able to dispel, and we hear the testimony from those that go through. And of course, there's wider work beyond, I think, ICAP also on coordinated risk assessment and what that may mean for Pillar 2, as we heard from Thomas and from others. And I'm not going to go through all of those. And then you see also the richness of the environment that cuts across different organizations, that cuts across very different countries with different experiences of what their respective challenges are and how they move forward. And so that we can offer solutions to those different circumstances that may not always be the same. Also take away, I think, Sandra, what you indicated, that maybe also like we need to sort of workshop some of that sort of working smarter, because clearly the data shows that while we're keeping up, we're not necessarily turning the corner, and so doing MAP harder in and by itself will not do it. We need to reinforce those efforts, and we see these great examples in the MAP Awards about what is possible when people work together proactively, collaboratively, and smartly, I think, in solving some of those cases. But there's also many of these other initiatives that make sure that things don't go in the MAP pipeline in the first place. So I think it leaves me just to thank all of you. Thanks to Bob for hosting the award ceremonies. Thanks to all of those that participated, whether you're from business, whether you're from competent authorities, whatever your function is to kind of keep working on those issues, to keep the focus on the issue that sometimes falls off. I think we're also broadening out to APA. We will bring the statistics in a while, so we also get that data in. So I guess with me and on time, like Tax Certainty Day and the case resolution, and I'm sure we've solved a number of cases while we've been talking, your busy colleagues. Thank you so much for tuning in. We will be in touch for more. Thanks. And remember, Tax Certainty Day is every day. And with that, I leave you. Thank you very much. And goodbye, good night, good morning, wherever you might be. Bye-bye.
Bye.